All right. Peace, power, and profit. Peace, power, and profit. Uncle Joss and Ned. Right. Life, prosperity, and health. And we're going to add another one to that. We're going to say wealth, right? You got to pull up that comedic word for wealth, right? Shout out to everybody on this Tuesday, Taco Tuesday, right? I need to have the taco memes popping right now. I need to make sure I make that happen next time we do a Tuesday broadcast, right? Hope everybody's having a great day. If you are obviously engaged in the markets, I'm sure there's a lot to talk about that you may want to talk about. Seeing as, we watched the Federal Reserve Chair Jerome Powell testify before Congress again today. A lot of it was just recognition for his nomination to be reelected to that chair. No surprise there. He got a lot of the senators to back him again. A lot of various reasons behind that, possibly. Who knows? Of course, they might have, a lot of stock interest in that too, right? Hence the whole issue why Congress is double dipping, right? The Federal Reserve, the federal government as a whole is double dipping, right? Which is important, right? Because why? If they're going to set policy, to affect the American people, why should they also be able to invest in these said stocks that may benefit from said policies, right? Again, blatant slap, in the face to American citizens. I mean, clearly outright. And again, it's like the saying goes, right? They pee on you and tell you that it's rain, right? It's a, raining lemonade from heaven or something. I don't know. Again, these people think you're incompetent. They think that you don't have any, say so or fight or in you or whatever. But that's pretty much seems to be the rolling conversation surrounding Congress, the federal government as a whole when it comes to the stock market. Again, we say that this economy is not measured by the stock market, but I beg to disagree under what we just witnessed over the last 2 years and the talking points that came from all the social media sites, the mainstream media talking heads, where they spoke highly for the value of asset ownership as being somewhat the vanguard to keep America up and running, right? The pillars of society are those who own assets, maybe if they said people who own businesses, right? Or build businesses and employ people, but they say if you just own assets, you're a pillar of society. You're a stakeholder in the corporation of America as we know it to be. All right, these are not my words. These are just based upon a lot of the again, the talking points that comes out of the congressional side of things, right? So shout out again, everybody's tuning in again, coming on a little bit unexpected, but as always, I pay homage to those who tune in when you can. I know you guys are busy, probably working, closing out your trades, or obviously out your trades after the 4 o'clock hour. But if you might be extended hour trading, definitely, kudos to you. Be cautious, be patient, be thorough, of course, as well, because today was definitely a fireworks type of day. We're going to get into that. Some of the gains that were, granted to the stock market today was based upon Wall Street trying to, again, price in the idea that the Fed is still accommodative, right? This whole idea that the Fed still has a little bit of juice left in the tank, right? He's going to keep printing, or he or she or whoever, right? They're going to continuously print money. And Wall Street definitely took a cue from that playbook today. And we had a great day in market gains, with the NASDAQ definitely being one of the leading factors to drive the market higher. No secret there. Of course, S&P following in tandem, because a lot of these stocks are in the ETFs that are designated for tech and growth plays and things of that nature. So you're going to see that expansion across, most of all those, high capital laden growth stocks, their ETFs in tandem. And typically when that happens, even the Dow component in itself, the Dow 30, right? 30 of America's greatest, industrial strong companies like, John Deere or Home Depot, et cetera, it all rose, basically down here from there, right? Everybody benefits, so to speak, right? Everybody get a taco, right? You get a taco, I get a taco, everybody get a taco on Taco Tuesday, right? So the register definitely was rung today in the best way, where we saw again the markets just, really, capitulate in a good way to the upside, right? So the SPY itself, obviously, clocking in near 1% on the day, right, in terms of daily gains, which was a phenomenal, given the fact that how we started out this morning, the market kind of pulled back, kind of showed some weakness and fear in ahead of Jerome Powell's speech, but after that, it came roaring back, right? Again, the idea that he spoke a very dovish tone as opposed to a hawkish tone made investors feel good about their situation, apparently, right? With the QQQs, obviously, in that terms of the tech stocks, when we say the QQQs or the NASDAQ or whatever, it gained over 1.5+% today in intraday trading, which was another astonishing blow to that of the possibly the dollar in some cases, even though it kind of pulled back, gained some pullback. It was just all over the place, right? But most importantly, the 10-year Treasury yield. What everybody's watching right now is that 10-year yield. Why? Because it pretty much is the barometer of the cheap money that's been doled out by the Federal Reserve that has to deal with a lot of credit borrowing, and a lot of things that these companies, when they borrow money as well, to then again take that money and buy back their shares and do silly stuff that really hasn't anything to do with innovative values to really grow their company organically. Well, guess what? There's going to be a party, right? Because it's free money in their mind, right? We know that to be true. This is not a conspiracy conversation. People know that pretty much how the system works. All right. And again, it goes back to what I said in the very beginning. That's why if you are an asset owner, person who invested in the stock market or invest in US equities, or the ideal behind American corporation as a whole, you are considered a stakeholder. So you'll get, the benefits thereof, and looked at as such if you are participating in it as well. Right? It's kind of like a double standard. Like, man, this stuff is crazy. They just, doing over the, the American people on Main Street, but at the end of the day, but this money show looks good in my bank account, though, right? I get it, guys. I get it. So again, it goes to even like the meme that I have on screen right now. You got your little 3% raise, you feel good about yourself, right? You dusting your little shoulders off, right? Your boss, I'm gonna give you a 3% raise this year. And you feeling good about it. You never give me a raise, but turns out that you still undercut. Why? Because inflation is up 7%. So you under, actually. You went under. Even with the raise, you went under. I mean, that extra 3% kicker was just enough to cover, maybe a third or a fraction of the taxes that you're going to have to pay with a higher pay raise, but everything else is still what you went under. Cost of living is still higher, gas is still higher, food is still higher. So you actually went under. You went into the red on a raise, a pay raise. Let that marinate. See how they do you? That's the system for you, right? So shout out, I guess, family coming in. What's going on, family? Everything in the building. Brother Mathis in the building as well. Shout out to you. Peace, power, profit to anybody may be listening on Twitter and Facebook. Of course, I know we are in the middle of scrambling hour of the day. People moving about, getting off work, going to work, settling in for the evening. Just came off the market. A lot of things are happening in and around your particular ecosystem. So I appreciate you if you're viewing, if you can. And so, yeah, just putting this on wax a little bit. I wanted to kind of, preset the conversations for us tomorrow. When I say that, because we have a big piece of economic data that's coming out, and that of the CPI. All right, this one here, as just like last year, is a very, very, well, I say last year, maybe December. This one's going to be a very important readout. Why? Because the Federal Reserve as a whole, the Bureau of Labor Statistics, right, who track this data, whether they're going to provide us an honest number or they're going to, cook it or, manipulate it, whatever. But of course, Wall Street in their mind is possibly thinking that it may come down a little. Now, here's the reality within that. Even if it wanes a little bit from what it was last, readout, which is 6.8, let's say it comes in at 6.6, 6.7, 6.8, or maybe even 6.9, because the consensus is at base is 7%. Now, we know that's not an honest number. That's just a roundabout number they try to do to control the narrative of investor sentiment, right? Because honestly, that number is well above 7+% as of today, right? In real time, because again, they do not equate food and energy in terms of oil into the CPI data, right? Which is in itself is blasphemous, if you ask me, because those are the biggest expenses that Americans do have to deal with, right? Your gas pump, if you drive a vehicle, and definitely unless you got an electrical car, and then your grocery shopping, right? So more manipulation by the U.S. government, again, to kind of give you these fake readouts to make you feel feel good about your particular situation, or maybe even political party that you may, ascribe to, right? Of course, I don't do political games, no secret there, right? Not gonna get me caught up in that. So yeah, that's just what we have to look for as far as tomorrow. So a lot of people are banking on more potential gains tomorrow. If that number does come in a little lower than usual, that'll be another reason for Wall Street to pump it and go higher. Why? Because we're still close. Believe it or not, we're still close to all-time highs, right? No matter what, and how we look at the markets as a whole, we're very close still to the all-time highs, right? With all this ambiguous data that's still surrounding the markets, right? The good, the bad, the ugly. However, right, we're still very close to those numbers where we can potentially break out and retest some of those highs. Again, looking at the chart here, as you can see on my screen here, this is the daily of the S&P 500 here. Of course, we played off that, that pivot line today like a boss. I was, trading at or around this. Let me move my little meme here. Forgive me here, guys. Let me take off little Ray right here, right? All right. As you can see on the screen here, that was the pivot point to play off of today. Why? Because the way that they, left this ugly wick yesterday, meaning yesterday's daily trading, and they kind of closed it at that particular line there. We had this line here drawn days ago, and lo and behold, the market played right off of it. I mean, these people, man, I don't know. Anyway, but that's what that was the price action that we got out of this today, and it was easy because I pretty much set my line in the sand around 462, and change, basically around about 462.20 something. It's when I, chose to take my, my bullish disposition value, right, in terms of seeing how the market kind of closed, right? So I was like, I'm swinging me some calls into tomorrow, and lo and behold, we opened up literally about 465, right? Had a gap up because yesterday's closing price in itself, right? The closing price in itself yesterday was like 465.51, right? Even though we pulled back as low, right, as 456, right? But I still was trying to play off this pivot point. It turned out to be a great place to put, buy some calls, and they benefited, right? Lo and behold, they benefited even more so today, right? I had some 466 calls into today, and I also had some 470 calls in today. Both of them printed, right? Both of those calls printed today, right? And I also had some other little equity stocks like Beyond Meat. Of course, in their scenario, they just, added Pizza Hut as well as, Kentucky Fried Chicken. They got the new plant-based chicken that all the KFCs are now starting to, implement throughout their chains, right? So that test run is over. They actually like the product. And yesterday was its debut of the KFC plant-based chicken sandwich, right? So the chicken, I ain't even call it chicken sandwich, right? But just the chicken nugget, if you want to call it that. I think they're like $7 for a box of like 7 or 8 of them. I'll let y'all be the decider of that, whether you're gonna pay for it or not. But nonetheless, KFC rolled out, that value. And so, that was a bullish, call by that I bought into that news. I was on top of that. So it was a swing play that paid out well today. We got up as high as like $70 and change, somewhere around there. So that was a massive little, little swing play. So yeah, we did pretty well, right? Overall, right? Now, going into tomorrow, of course, looking at the chart here, you would think to yourself, we're definitely back in the swing of things here, where we may have this J hook pattern here that may cross over. Obviously, the goal is to try to get above the 20-day moving average here. As you see, it hit that point today and hit some major resistance, right? Roughly around, let's say 470, right? Let's call it 470, even line, even number in the sand, whatever. Right. So even if we put, a somewhat of a line there, or bar there, or a marquee there, it will make it more, I guess, plausible for people to still feel bullish about the markets, given the fact that we pulled off the 456 point of support. It pulled down, testing that near that 455 and change, to be exact, close to that to a degree. That gives people new energy. Why? Because look at the RSI. The RSI is starting to curl back up, right? That's somewhat of a bullish signal. All right. The momentum value of the selling, even though it was coming down, the momentum squeeze indicator obviously is showing now that wave of, buying to slow the market down is starting now potentially change into buying the market to kind of run it back up. But that's all speculative, because I think there's still fear surrounding the equity markets as a whole. That line around about 471, 472-ish area around there is another line of in my opinion, of interest. And then beyond that, of course, 474 back up towards the all-time highs, 477, that straight line there. But either way you look at it, the CPI data that's coming out tomorrow will definitely, it's a binary event. Let's make no mistake about it. It is a binary event, right? We're going to get an on or off move from it one way or the other. So like most cases, when you have such a big data point of that coming into an already weak market, chances are Wall Street will try to get ahead of it and front run buying the rumor, right? This is no more than old school buy the rumor, guys. Don't be fooled. I repeat, do not be fooled. This is old school buy the rumor. These last 2 days have just been, of course, they're going to say, well, he spoke a very dovish tone that he was signaling. He spoke about everything they put out in the Fed minutes last week in the FOMC readout. So what was any different to him, him standing out his mouth to make Wall Street feel good about this situation? I mean, we're still sitting at around about an 86 to 89% chance that we're going to get 3 to potentially 4 rate hikes this year. Nothing has changed in that perspective. Again, the juggernaut, or the silver lining, is that they're hoping, right, that the CPI data comes out lower or lighter than expected, as if that's going to be the end of the inflation. See, this is the game that Wall Street plays. Again, hey, I don't make the rules. I play ball like everybody else, right? I got calls out there like everybody else. I understand that, but I still got to speak of what? An unbridled truth. Why? Because if I convince myself or anybody else that may listen to this broadcast that this is just, risk on, forget everything that's happened. We're still in a, low interest rate environment, no issue with the Feds, really still backstopping the markets. If they're not pulling money out of the market, then that would be irresponsible, right? No, you still got to understand the rules of engagement, no matter what. And you can still be bullish with a negative, hedge-like mentality, right? You got to understand this is a game of also protection, right? It's a game of defense, right? How do you win NBA championships? Right? Defense. How do you win NFL championships? Defense. Again, if anybody watched the national championship game last night I guess it was the Georgia Bulldogs and Alabama played last night. I didn't watch the course. I don't know how they won, but I'm pretty sure they had some good defense at some point, right? Defense win championships, right? Old school, right? What's going on, Ober Rich B in the building? I see you in the house. Peace, power, profit to you as well, right? So defense wins championships. So that's what we're looking for, far as, them setting up that kind of aspect of trying to protect certain points of of support, right? Clearly here, getting down here, it can get a little messy, right? Even at these areas here, this line right here, around that 458 area. Of course, we broke down to 466, but anything inside this little penalty box here is probably problematic for markets. We got a gap to get filled down here at 445. Clearly, you can see that there. Matter of fact, let's draw some lines on that stuff right now. It's going to make this stuff draw lines in the sand now. So at some point, if the market, choose to want to, play ball, respectfully, right, then we'll be ready to, I guess, make the decision that's going to be universal for our, ability to make gains off of it, right? If it decides to come down and fill some of these gaps. If not, we're still going to do what we always do. We're going to play ball, right? Until they change their narrative. But those are 2 gaps right out the gate, right? Not even up for debate that has, potential to get filled. And of course, down here, this one down here around 434, right? So that's best case scenario, right? That's when we really get excited. Why would I get excited about the market coming down? Why? Because we do realize that everything is running still red hot. PEs are through the roof. Valuations are through the roof. Organic growth is not through the roof, right? This is all funny money business. This is not good innovation. This is not good record keeping. This is not R&D capex spending. This is none of that. This is just cheap money that's chasing, assets to drive their price up because there is no other alternative out there to invest in or to get behind. Simple as that, right? So these are stretched valuations under that metric. So therefore, at some point, when the money recedes or goes away or gets pulled back, well, what's going to happen to a lot of these overly priced stocks? Do you continuously think they're just going to roar to the upside with just, unabated with no kind of, repercussions? I'm from the old school in that perspective. I don't think that's plausible. And I don't think it's healthy for me to be buying stocks at, overbought, all-time highs with a lot of things looming still in the economy that I can, as a Main Street citizen, live through and see that there's problems out there, right? That's just not responsible. Of course, that's just me. So the game is to learn how to hedge, right? So this is that reality where we say, hedge, right? To hedge or not to hedge. Part 2, right? We did one on this before. We were speaking about that. dealing with CPI data, and here we are dealing with the part 2 aspect there, because this particular readout is very important, right? It's very important, right? Because it's speaking to that ideal of needing to backstop all of this, again, market euphoria, right? The hesitancy to hedge the market properly, if at all. It's to be, it's definitely worth, looking into. And so that's just the only way you're going to be able to play these wild, volatile swings. And we do know that even in bear markets value, not saying that we're in a bear market, even though the NASDAQ was close to going into what they consider to be bear market territory, and they having these wild swings up out of it because they don't want to deal with the algo that reads that will start to say, well, okay, we're bear market territory. It's time to take the heads off all these high PE stocks first, and then we'll work on some of the underlying ones after that. So, of course, there's a major campaign behind the scenes, hedge funds, banks, right, et cetera, who are buying the markets, on good, bad, or indifferent information, regardless of the situation, to keep markets from feeling like they're in the fog of potentially pulling back inside of a massive correction, which is needed. Of course, it's needed. It's healthy to get a pullback. It's healthy to go to the doctor, get your teeth checked. It's healthy to go to the hospital, get your physical every year if necessary, right? It's healthy to do these things, right? But the market don't move under that realization. To the market is like a big gluttonous, person who's highly, gluttonous and potentially maybe a little too over stuff. They're overweight, and to them, whomever, they're looked at as still potentially healthy, right? As if that's a healthy reality. Well, of course, we know different, but Wall Street will have you to think the different. So again, cooler heads prevail, and smart people will always step up to the plate and give people the reality of what things are as they are. So therefore, you never get ahead of yourself, right? You never get ahead of the market, right? Even though you can still trade under the rules of engagement, because that's just how this stuff works. You follow the money, right? You follow where the big money goes, and therefore that's how you make profit. Especially, this is speaking to the traders out there, of course, in this case, not the investor, but the traders. Even if you're starting to think about taking on positions right now, well, of course, you want to look for more, better discounts, of course, value plays that are just starting to kind of come off their 52-week lows that have, pretty decent balance sheets and maybe offer dividends. And, they just seem to be a great rebound store or, a retracement story going into 2022. And that's how you start positioning your portfolio, right? Because again, you want value. You want, the potential to, dollar cost average, principal base and average off lower price values, right? A more realistic PE, right? Price to equity ratio, right? That's just basic understanding of how this stuff works, right? So we're ready for it one way or the other, right? So shout out to everybody again coming into the building, right? Who may be tuning in again on Taco Tuesday, all right? Just discussing some of the, the reality of going into tomorrow CPI data. What will be, what will be the tail of the tape, right? Like a boxing match. What will be the tail of the tape tomorrow? So, of course, being right at the resistance point at the 20-day moving average here on the daily, right? I mean, we're sitting right at it, right? Right at it. We couldn't make this stuff up, right? If the data comes out, and just let's say that, it comes in lighter than expected, it wouldn't be hard to fathom that we possibly could even go up as high as like 470, between 472 to 476, right? You can have that kind of day tomorrow if that data comes in lighter than expected, and Wall Street uses it as a lift off moment to still pump more money into the equity markets, and we'll play off that point of resistance when we get there and say that we're just too close to all-time highs for them not want to try to break it and go high, because they know about time the Fed stop really, with the quantitative easing of their federal policies that they got out there, by March, obviously, we may get our first lift off and rate hike. That'll at least say, well, at least we hit an all-time high within the new year in a way where, we set a new benchmark precedent, and we'll deal with everything after that point, right? Again, just kind of moving the chart over a little bit here, as if, if things was to go the way of what Wall Street would like, if they can take out this 482 line here, somewhere around there, 480, 482, they can meander around for the rest of the year, potentially, right? Just kind of pulling back, going or whatever, and they still feel like they'll be on course for potential great gains in the 2023 if things work out. Why? Because look, if you say this whole area right here, area of interest, is relevant to that of a potential 10% to 20% potential pullback. Let's say the all-time high is at 480, right? And we pull back at least somewhere around about 426, give or take somewhere around there 420. But I even go as far as maybe say 420, right? Because that was a little pivot point there as well over here. They will see, consider that a massive correction, right? But never mind the fact that we had enjoyed all this just unlimited money printing. As far back as, of course, the lift off of March 2020, excuse me. But even at these points, these pivot points here, around 316, this area of chatter right here will still be as if we just count that as just, hey, you got to count it into the market, right? There's nothing you can do about that, right? That was the way that they backstopped a lot of people, house equity, their 401ks, pension plans, whatever. So I think everybody will feel comfortable in saying that that's a one-off that we'll accept, given the fact that we own the assets. But again, speaking to those who do not own assets, what benefit did they benefit from this? Where's their benefit? A couple stimulus checks, that's it. But their bills are, right? I mean, seriously? But anyway, but that's just the nature of things again. So we understand it. So that's why we want to teach, a lot of people who are afraid of the markets to understand how this stuff works so they can get in as well, right? That's a part of actually hedging, right? To figure out multiple ways to make money or have different, multiple irons in the fire, being able to generate income. That's a form of hedging against having all your eggs in one basket, like that, that of having a job, right? Just a job and job only. Like, no, you got to hedge against that, right? That's reality, right? Wealth is created through multiple streams of income, right? Or business ownership and asset ownership. Again, you can't bank on Mr. Charlie being the sole provider of your existence. That just makes no sense in 2021, 2022, going into the future, knowing what we know now, right? At some point, we got to get a little bit more excited about growth, right? Besides just trying to do the bare minimum and hope everything goes and checks out the way you feel like it should go, right? That's just not how things work. So yeah, that's what we're looking for, guys. So we'll see how things turn out. So again, they're expecting around about a 7% number tomorrow. Again, if you look down in my description box, like I always like to try to have a little data down there for you, right? So some little data points that you can also read to kind of track a little bit of my thoughts and what may be great for current events, going into the next day. So let's go down there really quick here and see. Of course, today's value of the markets obviously had a great day where we saw the 10-year Treasury yield kind of fleeting a little bit off that 1.78, 1.79, even close to 1.8. But if you even ask me in terms even the 10-year yield, I think it's consolidated, right? It's not like it's plunging now like it did before after we had some kind of massive news dealing with the Fed's thinking about slowing down on the quantitative easing, right? After the 10-year yield tried to make a run at saying, hey, it's time for us to do liftoff now, and the Feds just beat the bums back into their cage. I don't think that's the case now. I think it's starting to consolidate now around about 1.7 plus, and anything above 1.7 is still a lot of fear for Wall Street. Right, dealing with the 10-year Treasury yield, that is what I'm speaking about here. And so we'll keep an eye on that 10-year yield because that's the barometer that we know Wall Street watches. So again, as you see, it says U.S. stocks bouncing, and Treasury yields retreated on Tuesday in a choppy trade as investors absorb remarks from the Federal Reserve that interest rates are likely to rise this year as expected. See, that's that part right there, as expected. Of course, these things came out last week, no secret. But Wall Street is very finicky and funny, and they look for any reason to say, see, I told you this is not as bad as it is. Like as if the data changed, right? No, you're still getting the same information that was came out on a, I guess, in draft form. Him saying that is not necessarily a constellation, but again, anything that Wall Street can use to fuel its fund, then they'll do it, right? They'll do it just for the strength of it. It's like, okay, it's not as bad. It's the same information we got last week that caused the market to pull back, right? So they'll say, well, maybe the devil's in the detail. He said potentially 3 is supposed to 4 now. Everybody thinking 4 rate hikes. Now he's on possibly thinking 3. they'll say, okay, that's good. See, that's good news. Like literally, this is the mind of Wall Street, right? It's charlatans, right? Charlatans, right? So in comments to U.S. Lawmakers, Federal Reserve Chair Jerome Powell said he expected the Fed would raise rates and end its asset purchases this year, but that the central bank had made no decision about the timing of the tightening of monetary policy. Now, what's crazy with that? So when we're saying tightening of the monetary policy, well, we know that has to do with the quantitative easing. That's a policy that they put forth, right? Obviously, right? Buying $120 billion worth of treasuries and mortgage-backed securities. Well, the only other aspect to that would be the run-on on the Federal Reserve balance sheet, of course, which is now at $9 trillion, right? They've printed, so much that they got $9 trillion on their balance sheet, right? The only add value to that would be if they start trimming that, right? Which we know they said that they're going to start doing that at some point too. So that's the ambiguity that Wall Street is also saying. See, that's good news. They may wait to start pulling some of that money out of the reverse repo operation later in the year as opposed to early in the year. So we'll still have that much money of liquidity still left in the system, even though they're going to stop the bond purchases and the mortgage-backed security purchases, but we still have that influx of cash that's still sitting on the bank's balance sheets in terms of because they got money from the Feds and relinquishing their bonds and took on bonds as a way of holding, the market up, and keeping the dollar suppressed and keeping bonds yields low to keep cheap money still feeling like that's the name of the game for investors to stay invested, then we'll run off that. I mean, literally, that's the whole talking point. Now, I'm not making this up. That's the entire talking point that Wall Street is putting forth in this initiative here. So again, it was a reason to rally today. Right? They'll find anything. They'll rally on a ham sandwich if they could. The markets will rally on a ham sandwich if it could. True story, right? But we know different. So again, that's the euphoria. That's the silver lining that they're playing in terms of that game. So it says what? We know that high inflation exacts a toll, right? Powell said, pledging to use the Fed's full suite of policy tools to prevent high inflation from becoming entrenched. Of course, they started the fire, and now they're claiming they got the tools to put out the fire. But what they're doing, they're being hesitant to put out the fire. Why? Because they feel like the fire that's set is actually good for the forest being burned down, for Main Street being burnt down or burnt out of their existence. It's still good enough where they say, well, you know what? It's providing heat. See, it's providing heat for the winter of, a coldness that's happening in around the unemployment market. I'm being in my poetic moment right now, right? This is their mentality. This is their logic. They was aggressive at pumping money, but they're very slow and hesitant to take it away, even though they know that's the problem that's causing, inflation and everything else to be in shambles. Again, there's an excuse for everything. Of course, I'm sure y'all listened to the speech today with him speaking. It was just like, oh, okay, here we go again. You just slap your head. You be like, oh man. You start shaking your head. You be like, man, look here, right? It's like, you looking outside your window, somebody out there doing something goofy and stupid. You just looking at them like, boy, look at him. If I be, that's literally what it was, like listening to Jerome Powell speak today as always, right? He back to the old school ways of just lying and pandering and pontificating and, just trying to speak to the Wall Street investment banker. Hey, I still I got your back until I can't have it any longer. Invested equities. Why? Because these people have a vested interest in the market. Why? Because they own assets too. Hence the whole issue behind him and Clarita and what was the other guys? Daly and few of those guys that were insider trading. They got a chance to walk off from their post with a golden parachute, retire without being punished for insider trading. Like one of the questions that came out from I think it was Ossoff, whatever his name is, the guy that just got voted in the Senate in Georgia. He grilled Jerome Powell on insider trading for his overreach, meaning the overreach of Fed governors who had the ability to time and trade the market. He held Jerome Powell feet to the flames with that today. And you could tell Jerome Powell was very uncomfortable, and he was like popping and pinging and couldn't really give a definitive answer on why he should, do something more aggressive to fix that. Like, we're working on that. You don't get to slap American people in the face by using their tax dollars to fuel your investment, a euphoria value of being able to, to make policy and invest in the market behind the same way to make tons of money. And then look at the American people as if they got the ability to sit through all this pain of unemployment and dealing with COVID and barely can pay their bills and act like they're fine with that. And this is the nerve of these people, right? They'll have you thinking different, but look, we know the game at this point, right? They just peeing on you and telling you that it's a lemonade shower, right? It's raining lemonade, right? Whatever, right? So yeah, we understand that, this is why you have to realize how the system works, so you can also participate in it in the right way. And from there, you can take your piece of the pie too, because they're going to use your money with or without your consent. Obviously, $9 trillion worth, about 6 trillion plus under the last 2 to 3 years, about somewhere in there 2 to 3 years, where they just pump money religiously into the markets using taxpayers' money, future money, right? And it just enriched those who are sitting in Wall Street, kicking back, laughing and like, man, this is just great. This is great. We never had nothing like this ever in history. They have it, right? So that's what makes this stuff great to them. And they're like, okay, we'll continuously, play ball until, they remove the balls and the bats and the gloves, right? Why would they stop? Think about that. Why would they? So that's why they still have this risk on kind of, mentality to a degree. And they'll continuously fight to, see what they can do until that, that punch bowl is taken away. So again, we're going to speak to those who are realizing that so that you can be, cognizant of that. And also you need to start thinking about hedging too, because again, 2022 is not going to be like 2021 or 2020. You're going to hunt this year. You're going to literally learn how to hunt better in your stock investment values, your rebalancing process, and all that you put forth in a game plan to make sure that you're going to be protected properly. Why? Because it seems like hey, we're still back to the same business as usual with equities, feeling like they're shrinking off any kind of value of potential bad news and everything's going to be okay. Hey, just stay invested, right? Don't bet against America, right? Wasn't that Warren Buffett that put that quote out last year? I think it was like 2020, the summer of 2020. He made that, that renowned, speech on, I think, CNBC or somewhere. He was like, but don't bet against America. See, this is why you don't bet against. But that was under some really serious circumstance, right? That was in the middle of the pandemic. We was in quarantine. The world was falling apart around the world. Now that's not the case. That's not the case now. So to continuously say, I'm just going to, bet blindly with America, knowing that all these things are now starting to kind of, reveal themselves as problematic because it's breaking down the fabric of America, right? That would be asinine. Again, inflation is sitting up near 7%, near 7+%. So I'm like, okay, yeah, it may be time to, switch up the game plan just a little bit, right? Maybe just a little bit, right? But that's just my thoughts, right? Right. So yeah, we're ready. Again, we're ready to see what's going on. I'm in the dark over here. My bad. We're ready, right? And we're going to be positioning ourselves again to deal with, the coming months in terms of how we're going to be, setting ourselves up to, play this market more thoroughly, right? So I'm excited for that, and I'm excited to, again, offer up, correct commentary, right? So therefore, people don't come over here looking for an echo chamber to say that, just because you want the market just to negate all that of the real news and data that's out there, and just go all in. Right? No, that's not what we're going to talk about over here. Now, even though I make money on calls and make money on long positions like everybody else, right? Just like I did today, doesn't necessarily mean I still take the overall perspective that the markets are fine and everything's on good footing. That's just how this stuff works. So again, that's why we're going to talk about hedging, right? That a lot of you guys are already hedging because we talk about that a lot, but I still want you guys to realize, even within knowing that you have to hedge, even more so that you don't lose focus on why it's important to keep that strategy near and dear to your portfolio on a daily basis, right? We're not out the woods yet, is my point. We're not out the woods, so it'll easily draw you back into feeling like overly bullish, right? Overtly bullish. Like, no, we're good, bro. We break these point here, the resistance, we good. We back to business as usual, right? SPY 500, bro. We good. Yeah, I would love to see SP 500, S&P 500 at 500 as well. But I'm also understanding that on the equity side, like long positions, I'm very cautious about adding to any position that's already got a PE well above that of its, I would say next 24-month, average outlook. Like, it just does not make sense at this point to be buying at, pink unicorn all-time high price valuations and thinking that, everything is fine. Like, this is fine. Like, no, this is not fine. Right? This is not fine. Right. So yeah, we want to begin. Again, we want to be cautious if that's my point. So again, the name of the game is HEDGE. So even more so, as always, right? I wrote a song about it today, right? All right, called the Curious George Investor, right? Right, the Curious George Investor. Like, I always try to add a little commentary and fun when I come on and do a little something. So I wrote a song just to let y'all know how I felt about it. And would you like to hear it? All right, well, here you go.
I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. Now you be surprised at the info you get is by letting them talk, so I'm letting them talk. Gotta keep quiet, maneuver in silence to let them in, chalk up their body, another one body, that's just how it go. I got some secrets, I'm shaking the game so they stay on their toes. Stay in your lane, how to stay on the go. I can't play with the pros and act like a rookie, so they overlook me. They're not double up again, none of their nose, none of them cold. They just got lucky but never adapted, so I'm to the one if it's coming to blows. My enemies cutting it close, I let them think that they got me, but what do you know? I had them beat before we ever spoke, I'm ready for smoke. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. Now they ain't go harder than me, they need a blade in a sheath, a shank in a piece, a crate full of heat, an army, a fleet, a tank in a jeep, a navy at sea, with ace a marine, an ace up their sleeve, a team of marines, a freak on a leash, a beast with an appetite, razor for teeth, and still they will lay at my feet. Boy, you got the wrong one. I gotta look over all of my publishing statements for Q1 as soon as the song's done. I gotta call up my mama and tell her I made it as soon as my log's done. I gotta read all my trade publications and sip my tea till it is all done. I think it's all fun. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. Now you be surprised at the info you get is by letting them talk, so I'm letting them talk. Gotta keep quiet, maneuver in silence to let them in, chalk up their body, another one body, that's just how it go. I got some secrets, I'm shaking the game so they stay on their toes. Stay in your lane.
All right, we have to cut up a little bit, right? Again, we're going to cut up a little bit. So, again, the name of the game is HEDGE, right? The name of the game is HEDGE, right? So, it's important. Why? Because, again, wherever you feel like you're receiving a monetary gain, inflation is there to eat into that value of growth. Why? Because they will have you believe that if you can sit through the pain, that is, in their mind, of course, they stop using the word transitory, but we know better, right? We know better, right? We know that is, that horse then died, that ship then sailed. So yeah, you may want to start being more conscious about, wanting to, again, hedge some of all this potential, because I got to say that, downside risk. Because again, tomorrow CPI data that comes out, either way you look at it, right? Either way you look at it, it could be problematic, right? It can still be problematic, right? And if it comes in light, if they cook the numbers, right? Because we know how Washington works, right? Let's stop playing. And I'm saying that because what? Joe Biden is very desperate right now. His poll numbers are tanking, right? He has some of the worst polling that, we've ever saw in a long time for any president that been basically in his first year, and his numbers are pretty much in the doghouse. And we're not going to speak to even Kamala Harris, right? Her poll numbers are basically under the ground right now. Like, people don't even see her anymore or hear from her. She's just in the shadow somewhere, holding down a post that's obviously not deserving of her leadership. And in my opinion, of course, it's just my opinion. Don't come from me, all you Kamala Harris lovers and supporters. But I don't know how you can if she ain't doing that. Again, more of a reason why you might be living in a fairy tale, because that's not how life works. But yeah, so they need to have some kind of value of a win, right? So if it's just something as simple as getting a CPI data readout where they have a small comeback victory, and they'll say, well, they'll use it as saying, well, maybe the stock market loved it, even though they won't say it. But the same reason why Joe Biden would also say, I don't worry about the stock market like Trump did, whatever. But every time the market gets to fall, what happens? He's out there in front of the camera, just like Trump did. These people charlatans, bro. Don't fall for it. They frauds. All right. But anyway, we get it. So tomorrow will be interesting, right? Again, the number to beat is 7%, right? That's the consensus for us tomorrow's number, 7%. So yeah, they can't use the idea that people getting raises now, because their raises are basically infinitesimal to the grand scheme of the inflation that's kicking them in the teeth through gas and car price, mortgage rate. Like, that money's eaten up. That money's eaten up. Before you even think about really feeling like you got you won because you got a raise. Like, no, that money's eaten up through inflation. Right. So that's the hustle. Again, they make you feel good like they're doing something for you, but ultimately they're taking more from you. That's the hustle, right? So right now, we know that there's a big disconnect from government to Main Street to reality of things. And, we're not going to sit there and pander and play that game. Right? We're just not going to play that game, right? That's just, from the position that we know as investors and traders, right? We're just going to trade what the market offers us, and we'll look back and say, well, we did what was responsible, for our portfolios or our, I don't know, it's our sanity as things, work themselves through the system, right? So that's what it is. So let me get the link out, guys. If y'all want to come on, maybe we can discuss this a little bit more in depth, with the family here. There's the link there on the YouTube side. Let me also go post that link over here on Twitter and Facebook, just in case, if you guys hanging out want to come on. And again, like I always say, share a little bit of your truth about the markets right now, and what are what you're witnessing, and how are you positioning, or if you feeling extra bullish, or a little bit more balance between the both, or you feeling extra bearish. Either way, there's no right or wrong reality in that. Why? Because there's a lot of stocks that went up today, and there's a lot of stocks that went down today, right? And there's a lot of stocks that stayed neutral, right? So there's always that balance of all three aspects of of hedging in some aspects, where people can utilize the markets in some kind of form or fashion to still make money, right? Or as we say, seeking alpha, right? So that's what makes this market great, because it's a market for each and every person who can figure out a way or formulate a thesis to make money in it, right? As simple as that, right? So we don't come on and act as if we're not comfortable and playing both sides of the market, which we do. But we're definitely going to stay honest in knowing that, if the printer is getting ready to go bye-bye, then a lot of the, irrational exuberance may follow right behind it, right? That's just my opinion, right? So what's going on over, Chris? I see you popped in. What's going on this afternoon, man, on Taco Tuesday? What's up with you?
What's up, Oba?
You got it. You got it. Yeah, I'm pretty sure you was watching the market a little bit today and saw that, that man, that
Fugazi.
first of the day was just rip your face off again.
Yep. They always hit you with the Fugazi, man. But in my opinion, I see a lot of weakness in the market, despite, the rally at the I think during Powell, while he was getting grilled and talking, the market started to reverse. Initially it was up pre-market, and then because the 10-year yield, it had went down a little bit, and then it started to rise again, and then equity started to reverse right before the market opened, and then it opened red, and it started crashing down. But I noticed during this meeting, it started to rally a little bit. So despite, where it ended, I think it's down right now and after hours. But despite that, I see a lot of weakness, especially in tech. Tech is going to get beat up this year, in my opinion. So I definitely, will be looking to get out of tech. You stick and move where you can, but as far as long term, you take advantage of what you can. But I would not be, piling a lot of money into tech, yeah, especially, with that 10-year yield hitting 1.8, and then the Fed rate hikes. I would be very careful, with buying tech. Trade them, get in, get out, you know, like you said earlier, you got to basically be hunting, for, these investments, putting your money in the right places. Um, like I said the other day, I definitely am finna be buying up gold and silver continuously. Tech, I'm kind of hitting the brakes on tech because, like I said, this is the year they get beat up, and they've been getting they behinds kicked since the beginning of this year and the end of the last year. So that 10-year yield, it hit 1.8. It's really finna get bad for tech. I'm telling you. So I think everybody know this already. If you watch the 10-year yield and you understand how it works and the rate hikes that's gonna come, it's not gonna be good for equities. So that's what I'm saying.
Again, couldn't say it any better, right? There you go. Over Chris Logic in the building. Chris Woods, we know him as Chris Logic Professional. Go subscribe to his YouTube channel. Of course, we are about, bigging up those who, definitely come on and provide, clarity, content, and a conscience to the markets as well. So, I mean, and he's right and exact because, again, we're starting to realize, just by being able to follow the data as we know it to be. Again, just, knowing that, when the good, the getting was good and the gravy was, pouring, with no end in stock. Of course, yeah, we want to ride through what Gravy Valley with biscuit wheels in that moment, right? But when the gravy dries up, what do, right? You have to, you go back to eating dry biscuits, or you got to figure out another ways to wet your throat, right? And that being, by looking for other assets that may be, or other investment classes or asset classes that you also can now fund the money into. So that's why he's speaking about that deal of hedging, quote unquote, hedging equities with what? A more, centric, commodity-based investment. That through gold, through silver. Of course, we've been speaking about that. We spoke about it, I think, the end of 2020, going into 2021, and then, several times into 2021 that, once the printer retreats or the ink dries up, in that regard of the USD dollar obviously being diluted to death, at some point, even though we know gold, benefits off of Fed participation of quantitative easing in that regard too, but still ultimately in the end, it's a better hedge against fleeting price to equity ratios when they're just exorbitantly high, or growth stocks like that regard. People will try to say, well, I'll sit in metals. Why? Because it's always has been the most accurate store of value or store of wealth that preserves your capital even during downturns in equity markets, right? So that's the whole thesis behind owning bullion, silver, precious metals from that perspective, because again, it holds your wealth value because you're dealing with spot price. You're not dealing with, manipulated, inflated price that you would get in equity stocks by way of quantitative easing, the Fed's just being accommodated, even though we know, investment banks like JP Morgan, Goldman Sachs, and whatever, they do manipulate currency when they can through the Forex market. But ultimately, in the end, the price of these metals still holds spot value better and more proficient than that of equity stocks that are overblown, right? That's like a penny stock going from $1 to $15 in one day, right?
Yeah.
They just gained, 15 billion plus in valuation, and they did nothing, intrinsic in terms of organic growth to deserve that, right? That's the lunacy of markets, right? So that's what makes this thing, universally known that the procedure of hedging is something that every investor should endeavor to do, because if you take the approach that you just going to bet on America, good, bad, or indifferent, that shows the level of, in my opinion, financial irresponsibility, right? Or financial immaturity. Why? Because you feel like just because you take a position against the market, that's some kind of form of being unpatriotic. Like, where they do that at? Like, no, you hedge during downturns also to get better bang for your buck and your money, right? That's why people sell puts and sell calls, right? To play against, weakness in markets, right? Or when there's less volatility in markets, right? So again, it's a strategy that Wall Street definitely understands. And if you, again, are drinking the Kool-Aid to the point where you can't understand it as an investor or trader, then you're going to be in a world of hurt. Not that you still can't make money or do whatever, but I'm just saying it's not the most, I don't know if it's the most, strategic, perspective to take, right? So that's why it's important to hedge. So he's 100% right in his act. Again, looking at the QQQs, like he spoke about the tech, we spoke about this several times, and this looking at how it was just trending at above, a little bit over 400, right? During this glory moment, and since then it has retreated, sizably off its highs, right? That's an indication of what cheap money starting to reveal that it's finna go bye-bye. Look at this. We couldn't make this up. We hit a high around about 4.5, 4.7. And now, we went all the way down to 370. So what do you see here in this bounce here? What does it look like? It's just going right back to another point of a pivot of resistance, as we know it to be lower highs.
Yep.
Lower highs until they prove us different. So that's why you never get, overly excited about these little bounces. All I see is a lower high, and it's running right back into an area of resistance that we need to we're going to have to deal with. Anywhere around this 388, 390, right? Or you want to say even 390 if you want to go there and make it a whole number, right? Anything inside that channel right there is problematic, right? Anything inside that channel is problematic. And you see literally how it's extended, even come off the 370s. Now you sit up here at 385, and it's running into a CPI data that's coming out tomorrow. Again, good, bad, or indifferent about how the number's going to be. They may try to cook the numbers to make it feel good. We went over those different scenarios, how it may happen. But I still see that it's extended. Even if you get a run and play it at 390 from 385, because only 5 points, they can do that easy, right? Markets are, again, irrational, right? They're delusional. But even at that moment, I still wouldn't take the approach that we're back. Why? Because you still playing into just a dead cat bounce overall, where you got to prove markets that you are, that everything is back to a hunky-dory perspective where tech stocks can sit at PEs over 300 plus, like, again, a Tesla, right? I love Tesla like anybody else, but they still got a PE over 300, guys. That's price to equity earnings over 300. They're priced 300 times that of what they price to sales and price to book value or share price would really be in reality.
Yep.
That you couldn't make that make sense, but people, again, fanboys and fangirls and people who are drinking the Kool-Aid, and they can't take the approach that, from a responsibility perspective, someone telling the truth about their stock, they'll shut you down and just plug their ears and la 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 la. I can't hear you. See, that's lunacy. But see, that's the energy that the Feds have produced in this Alice in Wonderland type of marketplace by printing all this money. You made people irresponsible investors and traders. Couldn't make this stuff up.
What you used to say, but we ain't married to these stocks.
We rent, we lease, we don't own, right? We ain't married no 3-time cheater. right? Fool me once, shame on what? On you, fool me twice, shame on me.
Yeah.
Right? We're not going to play that game. So it's important that people realize that. So we own it. So again, Oprah Chris is 100% right to that. So again, when you broaden things out, look to the left. That tells you the historical value of how things are. You look to the left of the QQQs. What do you see? You see obviously some real problems, right? You see definitely, fleeting off, 405. You came down and hit 370, and you was going to go lower. Right? But they found a reprieve in it. They had to kind of start the bleeding. Y'all know Wall Street going to come to the aid best way it can. Right? But I'm still not, impressed or convinced, because I know the levels to look at to say, okay, well, yeah, you'll get my attention if you can break these levels, right? Clearly, you can easily just do 390 to draw you some lines in the sand, 390 to 388, however, right? Anything at or around that, fair game to start definitely think about buying some puts. Why? Because look at that bounce off 370, to go up 20 points in that perspective, and that the cheap money is about to get dried up. Right, like the Mojave Desert somewhere, right? yeah, I'm not impressed. You know, in terms of my tech holdings that I have, because I'm not adding to any of the tech holdings I have in my long-term positions. I'm just letting them ride at this point. I'm looking for value plays. I'm looking for stocks that again that offer potentially great little dividends that need a good bounce near their 52-week lows. That actually still got some a dog in the fight. Good comeback story based upon maybe cyclical nature of things or whatever. But that's just another form of hedging all the euphoria and high price stocks, right? So, and then some growth stocks are still going to benefit even in a low a low quantitative easy environment, but these are some of the ones who were still lagging during the fact when Apple was going through the roof, Microsoft and everybody was going through the roof. These stocks were still lagging, so they may get their ticket punched now, right? So that's something worth looking into as well, right? So we're excited, one way or the other, we're ready, right? We ready, right?
We ready. It's always opportunities, man. Just because the market goes up and down all the time. It's an opportunity going up. It's an opportunity going down. It ain't, you ain't got to get scared or, paranoid. Even if it's your favorite stock, just take the L. They not always gonna go up and to the right. You have to deal with the what we call it, the circle of life. It ain't always gonna be good. So expect, stocks to retrace, get corrected, get tested, and they gonna bend or break. If they break, you gotta accept it and capitalize on it. It's too many assets out here in the world for you to be worried about. Oh, stocks will crash, so getting paranoid. You still got crypto, you still got real estate. You got to capitalize off of this stuff. Metaverse, you got NFTs. There's so much money to be made out here. You know what I'm saying? If you feel like you can't do nothing else, but but stocks, capitalize on the bear market, capitalize on the bull market. You can play both sides. You know what I'm saying? This is not for you to fall in love with stocks and, if it ain't going up, you ain't happy. That's not how this works. It don't work like that.
100% facts and exact, because again, that's just how, as we like to say, being balanced in markets, will prove to be, or in anybody's case that, realize that there's, more than one way to make money in markets, as the saying goes, right? Bulls make money, bears make money, and pigs get slaughtered. Right? That ain't, that's not just a, quote you say that people use in the market. That's the reality thing, because nothing just goes up in a straight line. Nothing goes up forever, right? Gravity will kick in, physics will kick in at some point. So the reality, even with markets, because money, sometimes it thins out like everything else, right? There's a supply and demand even with that. It may not seem like it when you have such a accommodative Fed that built the kind of, irresponsible mindset in traders and investors these days. But lo and behold, if they really didn't live through any kind of massive crashes or understand the historical nature of how markets work, then all of this setting people up for failure, because it's not teaching good, again, responsible values for them to try to, position themselves going into markets. Right? Hedge funds do it all the time, but people will demonize it and say, well, when all they just doing this because of this, people selling insider selling. That's just, that's wrong. Some of them do it because they understand that a lot of retail traders who are not comfortable in realizing how to potentially hedge properly, that there's a moment in markets where you need to take profit. You don't just sit in stocks and you up 70% and say, I'm not going to take profit. Like, that would be ludicrous. That's the whole point of make money, right? Making money in markets. Make sense? So, yeah. So what about you, Sister Monica? I know you've been.
I say that again.
Yeah.
Say that again. Look at both.
Yeah. Yeah, because Sister Monica ain't no problem ringing that register, and Sister been bringing that register lately, So, she's been killing it, in a lot of different ways, and that just shows the extent of her growth and realizing how to be more savvy in her approach to investing. That's what this stuff does. It teaches you how to be more responsible, and the reality that you are still here to make money, right? A lot of people get lost in the ideal of trying to prove that they can do this, but they still forget how to ring the register. Right, the most hardest thing for investors to do on the psychological level is to learn how to sell when you up. Now, it doesn't make sense logically when you think about it, right? But the idea that you can make more money entice you to stay in trades that that you need to be kind of ringing the rest and getting out, because you can never time the exact top and you'll never be able to time the exact bottom. You can get lucky and do it sometime, but it doesn't happen all the time. So in that same mindset, you have to also learn how to what? Take profit too when you've done really well, in an investment. That don't mean you clean your entire position out. If it's a long position, you can trim some of it and what? Wait for it to pull back to add to it again. You can recapitalize that or repurpose that money somewhere else in another stock that may be what? Needing the help. That's just being responsible. That's what we're trying to all, achieve at some point in our journey in this. So with that being said, speak to that a little bit, Sister Monica, because you've been doing that a lot lately, and it's been proven to be something that you're running with
appreciation
now.
and kudos definitely go to you, Oba, and definitely everyone
hands
else on the
down,
panel who stick to the due diligence portion of it, and not allowing us to just make quick decisions. I think one of the things I learned that, like many others, and so like a lot of individuals now who they'll ask like, man, how did you do this, or how did you do that, or how did you gain profits on this or that, and they always wonder about what happened.
Because you stopped being cheap. Tell them the truth.
Oh yeah, I was telling my friend about that. I was like, man, I'm so cheap. I was so cheap, $5. I was like, I got $20 for free, and I still only wanted to invest $5.
Right? Preserving capital, right? So but that goes to your business acumen that you had before you came into this, this realm. And I think a lot of people, if you think about that, who come from, good business acumen, decisions that they've made coming into learning how to invest and trade, that in itself is a leg up. That's an incentive. That you're above a lot of traders who are coming in under the mindset, oh, stocks only go up. Somebody told me that I could just wait to get a ticker and then I could just trade it. Oh no, that's not how this stuff works. So
right.
Now, but speak to that.
And so, many people, I tell them, well, you got to do your research, and you really can't go off of me, because I've learned, what I learned, I actually execute, and I only do what I know. I don't try to do AE strategy. I don't try to do Chris strategy or brand strategy. I just take all the information and say, okay, now this works for me. I'm going to do it like this. And I set my goal, the dollar amount that I started with the $5 a day deal. That was like a good foundational basis. And no matter what, I said I should be able to make what it comes out to, like $18.75 or something like that a year. At a minimum, I tell myself that I know I can profit that $5 a day per year. But what end up happening, I end up doubling that. And actually end up, I said, okay, if I could make $5K a year, let me put that back into perspective. And I started analyzing how, when I worked in the federal or state, how much I was putting in the 401k or the TSP, and then how much I was, what did I gain at the end of that? And that's like, okay. And I test that whole dollar amount theory and how the market is. And man, listen, you were definitely right, because the same amount of money I was putting in the Fed or the state, I made more in a year or 2 years than I did when I worked out the entire time in the military. I was like, so the percentage wise, I was like, man, if I would have did this over 17 years, 18 years, but then I don't worry about that. So I say, okay, keep your same. I haven't changed my $5, $20 deal. But what has happened is that I say, okay, if I'm gonna think in terms of my percentage gain and dollar value gain profit, what would that be? So I'm still learning how to put the percentage into perspective. But I can recall when you told us about 3%. Like if I make 3%, I'm good for the day. So I kind of started riding off of that, and I just end up making more than the 3%, but I have a foundational basis. And I think what happens to a lot of people, they say, okay, well, let's just take the Ford Leap, for instance. Well, if you made $1,000 on a Ford Leap, what can I put my money in right now and make that $1,000? I'm like, it just doesn't work like that. You got to pull out this, you got to look at that, change this. And no matter what, I use you guys the same philosophy and say, nope, got to do the research first. I can't, we can't do it like that. We got to do the research first, because if you make a decision, you have to live with it. And it needs to be a sound decision. It is not a gamble, and you're taking a risk to extent, but at least you know that the decision that you made was based on methodology, and you're comfortable with it. And in the same sense, when you learn stop losses, right? You understand that you only gonna lose what you actually implement in. Now, if you're not, if you're trying to do like everybody else and looking for a run, so to speak, and you're not paying attention, you're gonna lose your money, And so the discipline coming into 2022 was that we have all these different investment vehicles that we can use. And I just went back and looked at, okay, what is doing well in each one of those, whether it's Robinhood, Webull, M1, Moo, Tasty Works, Thinkorswim, and then say, okay, if these particular assets over time can do this much, how much funds that I can put away for the long term and let it go that way, so I don't have to feel like I'm rushed to try to day trade. So I stopped trying to day trade and drive myself crazy over a whole bunch of assets versus just, okay, let me pick.
Staying within the lane.
Right. And I remember you saying, you know what, you guys, you can earn probably $100 a day just off the spot. So I had to reel it back in and say, okay, you had your little fun, you got your little feet wet. Now pick something, 2 or 3 things, and then really pay attention, understand the company, know what's going on, learn the terminology, and work it that way. And that's worked out fine for me. I think with most people, the discipline is diversifying, looking at your money more than one asset class, and also developing a plan. Many people don't have a plan. They just really in it and say, okay, I just want to make this much money. They don't really have a budget plan. They don't even have a plan. And I think the pandemic should discipline some people in that area, but it didn't. So I'm having fun. I'm having fun with how I'm doing it. I created a dollar amount what I want to do annually. And now I'm about to get back on my econ game with my percentage game, because I know how it all works now. So I know exactly how much I can make. I know how much I will make, and anything else is just great. How you say that? Gravy in the wagon or something?
You know what I'm saying? Little great, right? Biscuit wheel, gravy valley. Look at him.
Yeah,
biscuit wheel, gravy valley. Boy, ain't nothing better than that there, boy. Come on.
Yeah, and not be so pressured because somebody's net worth is more than mine at the end of the year. So I've learned, I've really learned how to pace. I really learned how to pace.
To speak to that, and I don't mean to cut you off, but I think that intricate part right there is what separates this entrepreneur endeavor than anything. Why? Because it's not competitive to the value where you feel like you have to outrun or outprove to someone, like you do in a work environment, like the dog eat dog perspective of being in an employment field, right? Or, McDonald's across the street, Burger King across the next. Of course, they always a competitive value to outmarket one another, outsell. In the market, that goes bye-bye. It's a one-man army operational endeavor where your money is the only thing that you literally, and the knowledge you have, that you're using to compete against, somewhat quote unquote central bankers in a sense, because they're the ones really supplying a lot of liquidity to the market. So it's already your money through taxation in a lot of ways, right? So you're just going there to try to get that money back. So you're not, I don't have to feel like, oh, I got to go prove this person that I'm better than them in this. That's how the market doesn't work. That right there eliminates a lot of the psychology, the psychological, deficits that most people have as investors, or not necessarily investors who yet to get into this, but who are skittish about understanding how this stuff works, right? Because they've been so conditioned to compete at, on a job or, whatever in life, right? But that doesn't work here, right? You could be pretty much an introvert, right? You could have a person who suffers from anxiety issues, and guess what? You don't have to worry about being on the job and feeling tense. You can sit right on your computer at home, or wherever, somewhere recluded in the closet maybe, and trade markets and invest in the markets and use other avenues to make money. Like how great is that, right?
Yes. And I finally learned how to read the volume. You all guys used to talk about volume a lot, like the stock don't got no volume, this, that, whatever. And what kind of brought it home for me, liquidity, volume, because Sister Camille said liquidity all the time. And what brought it home for me was Jonathan Owens, Smash, did that first video he did, and he talked about market cap and volume, and I was like, Oh, that's how they do that again. Because I was like, I don't know how they did that. Just would go in my head. So now when I'm looking at
You
when
need a
I'm
broker
looking at my
for that.
little equity, and I look at I learn how much volume that company has to have for that stock to start moving. So I go
Mo,
straight and look at the volume, and I'm like, oh, nah, it ain't time to touch that.
Mo,
Because I just kind of followed
you
the
should
price action with it, and
be in,
rising wedge
Patterns.
and the cup. I can see that stuff so clear now on that 1 hour chart. Like, yeah,
Mo.
what?
Universal good news.
You need to be in trouble for this
I
because
need to
we've
get what?
talked about this a million times.
I know, but I'm
And
on the shop
now,
bus.
hold on, no, that's because you was falling asleep in class, and you would have been known about this for 2 years now.
But wait up,
And you
Chris.
went through the mentorship too. No,
No,
you in
no,
trouble,
but
man.
wait, but you see, some learners like me, like I would only focus on the stuff that I could actually grasp at that time. And
Hmm.
so I maybe just wasn't ready to move to that indicator just yet. So, you know, now it's like sometimes some stuff don't play relevant, like you've heard it, but you don't really get it yet. And so I just take
Hmm.
my time with it. Don't worry about it. I got it together.
It's
I'm
because you was asleep. That's
Patience is
why.
a virtue.
No, it just wasn't relevant at that point.
Patience is a virtue.
I like the like my cup and handle moves. I'd be like killing that right now. Like I certain stuff. I know I just be a little slow.
Well,
But
you know, I
You
don't
ain't
use those
slow.
terminologies over here.
I
We don't use
forgot.
slow and we don't use,
Yeah, you ain't
slow
slow.
shot buzz. It's just, it's timing, right? Again, it's
Yeah,
fine wine seasoning, right? Everything has to become more lucid, with
yeah,
understanding, right? Or context, and
Right.
how this stuff works. So we building the bridge of what repetitive knowledge,
yeah.
assessment for at some point it will sink in, right, to your psyche. Because even though we know it's a technical, visual in a lot of ways, right? But it's still a psychological reckoning as well. You have to be able to own what you see and not
Yes.
question it, right? So the hardest part in trading, a lot of people will realize that is psychology. Why? Because human emotions are always the most wicked, adversary in your entire life in terms of when it comes to decision making. If you're making the right decision or not. Now, even when you pressed with, undeniable factual data, sometimes you will still have pause in some cases because if it's something that you're new to, chances are you still got to be what you want to question it. Well, I would hope that we question it, right? And don't take everything as face value because again, that just shows your level of discipline and the ability that you want to provide good due diligence and knowing as opposed to guessing, right? So that's why we say when we separate, or we say, well, we're not, gambling or it's not a scratching a lottery ticket because obviously it's not, right? This just more of an assessment of, okay, I want to be better at making executive decisions for my situation, right? As an investor, as a stockholder, as a trader, as a swing trader, there's many ways you can trade, forex trade, crypto, however, right? That's discipline. Everybody should aspire for that, right? So I
Right.
love it. I tell people, man, it's a marathon, not a sprint for that reason. And that, over time, markets will reward those who put in the time to learn it better. Makes sense. So kudos to everybody who's taken on that, that mantle, who realized that it's a journey worth embarking on. Number one, to get more knowledgeable, as opposed to feel like, you just want to chase everything and hope everybody provides you with a way to make money and you don't want to put in the work. Because as we know, one of our most famous sayings is that what investing in trading is not a lazy man's game.
Nope.
Right. I
Right.
repeat, investing in trading is not a lazy man's game. If you're a person who hate to read, if you're a person who hate to study, if you're a person who hate to kind of follow back and even listen to an audiobook, like how easy is that to do? Right? You could be on your way to work and listen to some knowledge that help you, your psychology just from an audio readout. But a lot of people they still gotta, I feel better being able to just chance it. I want to just chance it, and I don't get it, but they learn the hard way in this way because markets will take your money, right? It'll
Yeah.
take your money and look at you like, okay, yeah. We looking
Appreciate
at
it
you.
and be gone.
Right, you know what I'm saying? Like, you think you out there just go, get it easy. No, they. So yeah, so 100% right, and exactly in a lot of things that that you guys are definitely saying, and it's just showing the extent of y'all growth, right? I love that, like all of us, because I'm always growing too. I see that's why I always tell people too. I know I'm kind of off the flip it, but when I say Ubuntu, I really mean that, because I say, from a peer-to-peer reality in this, right? No one person holds the power in this. That's why I love it too, right? There's no archetype where this person controls all the power. We know people got lots of money out there where they can manipulate markets to a degree or whatever, but they still are subjected to the same information that we are, based upon what these companies can produce or they can't, right? And so it kind of equals out that playing field a little bit, right? It makes you feel like you are, the same as anybody else, right? Just maybe with less dollars, but you still have the same amount of opportunity, is my point. That doesn't separate you from the opportunity based upon your level of education and credit score or criminal history, any of that stupid stuff. And I'm gonna call it stupid for why? Because America is the biggest hypocrisy, nation on the planet, right? It's a bunch of hypocrites in this country, and they'll have you believe that, life isn't redemptive in the form that you cannot make mistakes, or whether they see it as a mistake or not, or you see the mistake or not, is if you can't rebound from it. Because again, they have you in such a competitive, mindset that if you make one mistake, you out the race, right? You got to go live a life of just, living in the, the underworld somewhere, right? You can't come back from it. That's a lie. Markets offer you that opportunity every single day. Where Wall Street or corporate America will, tell you that you can't. They won't hire you. A bank won't give you a bank account. Okay, well, I'm not going to deal with it. I'm going to go right over here, get me a little, a little stash card, and I'm gonna go right to work, right? I'm gonna go right to work in the markets or whatever. So again, it does open up a window where you have opportunity, endless opportunity, right? So we like to speak to that. Why? Because people will, again, convince themselves that they got to just, be disrespected, just to be able to be, I guess, to make money, right? To figure out how to, survive off of whatever. Anyway, it's a growth process. Right. So with that being said, what's going on, over Brandon? See you in the building as well. How was your day, man?
What's going on, family? How y'all doing today?
What's up, Brandon?
Doing well,
What's
doing
going
well.
on? Where's Mo at? Did she jump off? Because I was gonna get her.
Yep.
She handling business. She's still in work environment right now, so how it is. She's still making money.
Right. Still making money. I mean, day's been good. I mean, I'm still here working out for Mr. Charlie, but I'm always on my phone checking my accounts, making sure my setups are being, make sure my setups are being controlled properly, management wise. Making sure I still had that 3%, like Mo says, plus some. But you guys basically hit every key point on the head. You guys talk about, playing both sides of the coins. I mean, that's something that you have to learn. You can't just be a bull trader all the time. You got to be a bear trader sometimes. And, learn that bear aspect of it makes you even a greater trader, because you get to implement different tools on, like, trying to hedge and protect your actual, your account. And that's what you need to understand. I mean, yeah, it's like Chris says, it's cool to be a bull player all the time, but you have to play that downside. And then what makes it so nice is you can play your favorite trade, or your favorite trade, or your favorite stock. So if you're a Tesla person and the market is about to get hit from this, this inflation, well, hey, being a bear trader, you can hedge yourself in Tesla to make yourself money going up and down. I mean, and that's that with that.
Yeah.
I mean, no, I'm sorry. Go ahead.
No, you're right. I'm saying, that's the whole reality within learning how to become a more strategic investor, that you make money on both sides. And there's a third place. You can make money when market just go sideways. Like,
straight sideways.
All the people that they feel like they just can't fathom that or accept that, it's just crazy to me, because they're caught up in the Kool-Aid of thinking that if they do anything to, I guess, quote unquote, go against America, right? That's blasphemy, right? You unpatriotic. Why would you short the market? Like that should be out. Like, you hear him crying all the time when they stocks get going down. That's manipulation when the stock goes down.
And that's here at work too. People, Brandon, my stocks is going down. Like, all right, well, profit wise, what you take out? Did you take anything out? Is this a long term play for you? Are you keeping this? Oh no, I just played it for 2-3 days, see if I get some quick money. I was like, nah, it doesn't work like that. You need to learn how to. First, you need to first invest in yourself by getting yourself the proper education, hanging around with certain people who has the same like-mindedness in you, that does this on a not even so a day-to-day basis, but like who does this in general. Who actually stops, take the time out to tell you, hey, this is what I'm looking at. The reason why I'm looking at Just how much am I putting in, all that good stuff. And then from there, I mean, you can get an idea of, okay, you know, can I really trust this person? Do I really believe this? This is where, as a trader, you can back up what they're saying. You know, you can believe them, or you can say, nah, he's BS. He's not doing.
You can test it, right?
Right, you can
is
test
the greatest thing ever. You can back test a lot of this information through primary sources. Not a whole lot of conjecture, speculative value, pandering, you know, appealing to authority, right? Especially when you're on the scholarly side of thing, when people use those kind of, you know, talking points, right? It's like, dude, you eliminate that here because you're dealing literally with information coming straight from the companies, right? Information is coming from, you know, the consensus of information out there, right? From all sectors or industries that's out there. Like, this is a real true scholar's, you know, dream job. Why? Because they enjoy the, you know, the aspect of what? Being proven wrong, right?
Right.
They enjoy seeking information in a way where they want to falsify, you know, all the, you know, the frailty of what information that's out there where people kind of mislead people. You get to do away with that because you can go straight to source, you know, to the source and figure out, you know, whether or not it's actionable intel to equate to that of a financial gain, right?
Right.
It puts you in the driver's seat of basically learning how to now monetize what? Your intellect. Like, a lot of people love to do that.
I like that. Monetize.
Think about that, right? That's a t-shirt moment, right? Learn how to monetize your intellect. Why? Because, you know, a lot of people who are out there who are geniuses. Well, we know a lot of people that are geniuses, right? They may be in the hood, but they're geniuses. They just haven't figured out how to monetize it yet. Why? Because the system is set up to separate them from what? Opportunity in some ways, right? Because of disenfranchisement, the whole reality that we know we still live with in this world. Again, like I've said before, not that I'm advocating that the market is the only way you can do that through, but we know right out the gate, literally right out the package, you can come here and do that right out the gate. Now, we're going to say, obviously, take the proper time to get you some education first. But again, it ain't hard to open up a broker account. It ain't hard to fund it. It ain't hard to hit the buy button literally the next day. See, that's right out the package kind of reality and opportunity. You can't get that anywhere else, right? Without proper training and, you know, them screening you and checking all your background, you know, all that stuff. So I always tell people, that's why I say it's the best online business ever. Why? Because it puts you in the game literally right away. And you already know a lot of products because you're a consumer. So it eliminates a whole lot of stress in that perspective. But go for it, bro. You're right. You're 100% right.
No, it refers back to that saying, this is not a lazy man's game. And you have to do the homework. I mean, and honestly, if I'm just talking about myself, I did it before. You know, I put some money to trade thinking it's gonna go up to $1 million, whatever. A crow. You know, right. Like, that's the first and second, third. I did at least about like 10 times. And I'm just sitting there like, okay, what am I missing? I listened to what's his name? I listened to Jim Cramer when he was popping. He told me to put money in here. I listened to Buddy off of what's that guy name who only forgot his name. White guy with glasses, only wants you to do like mutual funds and 401ks.
Dave Ramsey? No,
yeah, Dave Ramsey. Yep. And I listen to them, and it brings a different perspective when you do it and you learn education, you know, or you do the education yourself and you find out actually what type of trader you are. So in the beginning, I loved short selling. Short selling was the funnest thing in the world. I made a couple bucks off of that. Got burned off of the other trading. I think that's what you're on right now. Trading that, got burned off that, got rid of my account. So, yeah, the platform. And I was like, all right, I got to slow down now. So I started doing the long-term thing, and I found out like I like doing long-term plays, especially when you integrate it with options too. I'm pulling down gains that I never thought I'd be able to pull down. I'm pulling down $300 gain, 300% gains, 400% gains off of, you know, Joe Schmo companies. And I'm like, yo, this is way more lucrative than, you know, trying to short sell a stock where you have to have an immense amount of capital just to get, you know, $1,000.
And risk preference, because, you know, we know understand that there's different ways you can, you know, engaged markets. As we like to say, there's more than one way to get to the bag in the market. That's what makes it so great. You're not funded into just a cookie cutter mode of how you should methodically trade markets based upon somebody else's rules of engagement, right? Because everybody have different time perspective, everybody have different capital allocations, everybody have a different level of understanding of markets, so they try to fit within the confines of what they can attain for. That's my whole thesis in terms of being able to disseminate this to anybody who's willing to listen, that hey, you can find your own niche and niche in this, but along the way, steal from everybody. Take a little bit from everybody. That's the process. Like I think Oprah Brandon, you were saying earlier about, you got to find, get with your community or people who realize that, of course, this is a vested interest that we all want to endeavor to benefit from, because we're just sharing information, right?
That's
There's
what
no
it is.
competition in this. Seriously, there's no competition, bro. I dug up some information on gold today. I dug up some information on, tech set. I dug up some information on biotech today. And it's worth proving that you can take that information, go back test it, basically go as primary sources if you can kind of get some news on that. And if it's actionable intel, you can use it, or you can flick it away and just keep moving. That's what I love about this, in that perspective too.
And then, with this whole thing, you really have to hone in on your psyche too. That's something I think you guys was going to mention, but I think you guys already mentioned, but trading in the zone again, trading in the zone. If you haven't listened to that, listen to that. Everybody needs to listen to it. Whoever's watching, who's ever on this panel, and if you haven't listened to it in a while, listen to it, because it's going to bring up the same things that you're doing right now, or the same things that you're doing wrong right now, if you're doing anything wrong.
Psychology.
That's what it is. Because I'm listening to it right now. I'm just like, oh my God, I did that. Okay, that's what it's called. I'm scared of doing this. I'm like, okay, let me think, let me focus, and let me revamp. So that's what I've been doing so far. I mean, saving my money, waiting for this bear market to happen, and hopefully capitalize off of that.
And that's the best part about, again, waking up to this. Like the current state, the best part of waking up is the Folgers in your cup. Right? The best part of this is waking up knowing that there's no pressure on you in terms of how you you're going to eventually grow into this naturally by your level of interest and time allotted that you're going to get it. Having the interest is the best thing first and foremost, right? That's like anything, right? Before you can become great at anything, you got to have the interest first, the preliminary, engagement, right? Or the acquisitive value behind it, right? That part of being curious George, right? After that, it will lead you to how far you take it from there will be based upon how much time you want to allot to learning it. It's simple, and the information is online. You don't have to drive places to get this. You don't have to sit in somebody's university to get this. You don't have to spend exorbitant amounts of money to get this. All you have to do is have the interest and stay, diligent and dogged and trying to, basically unpack it. That's why forums like this and many others where you can go to them and say, well, let me listen in on this information. All right, let me go listen to this person, right? And just take the information, right? You don't have to spend money to get information. Just learn how to ear hustle and then go back and back test it. Go back and test it against, primary sources. And eventually it'll begin to make sense because your common sense meet of business management and business understanding will begin to say, okay, yeah, we agree with that. We agree with that because and the data, backs it up. That's all this stuff really is, ultimately, in some cases, right? We know that markets still have a mind of its own some days, and it goes against fundamental, values. It goes against technical values, and it goes against even investor sentiment. But those moments they don't happen as often as it would be in this when you learn, again, how to manage risk within that too. Because, like Sister Monica said, the best thing you also learn is that there's use cases and stop losses. There's a use case for stop loss.
Right.
That don't mean the trade is over. It's just that at that moment, maybe you're a little too early or you're a little too late. But the stock will eventually probably work its way into the thesis that it was positioned to when it, shake out all probably the weak hands, right? Or shake out all the strong hands if it's trying to, go to the downside and then all the indicators show that it's ready to pull back and people still trying to prop it and hold it up, and eventually it pulls back. So that's just how markets are in that regard. So again, as they say, it's not trying to time the market. It's about time in the market. Because again, that experience will give you a lot more to work with in the back end, right? So 100% right in Zach, man.
That's a good point in reference to time in the market, because I don't know, for some reason everybody, a year is like a lifetime for many people. I'm like, it's just a year. What are you talking about? Like, really?
People sat in
like
their hands all 2020.
yeah, like when did we stop planning? I don't understand. Like, I'm like, wow, you mean to tell me you can't set a year goal? Yeah, that definitely falls over from business AE.
No,
We
they
getting
want
ready to
quick
do
money.
some contract training,
They
and
want.
I was talking to people about budgeting in the year, year planning. I using the investment. I twisted my training. Y'all taught me a lot. I'm gonna be powerful in a minute. I
You're
twisted
on your
my
way.
training.
Whoop
You're
whoop.
already on your way.
Yeah, for
Mhm.
them to start thinking, for people to start thinking how to self-sustain based on their investment accounts by when you're getting these contracts. There's no guarantee. That's why it's called a base year with option years, because based on your performance, quality of service, based on your how you can manage and control that contract is whether or not you're going to be in it the next year. But in the same sense, a contract officer, they was like, I don't see how you all just doing government contracts and you're doing nothing else. Well, we've learned how to leverage. Our actual company has a IRA. We have an actual, the LLC actually invests, so we could, if we came out of the contracts today or tomorrow, we could self-sustain because we've leveraging some of our profits to make profits. So I was trying to explain that to, and they was looking at me like, "What?" Like, yeah, like we don't bid a contract and there's no investment category. So a percentage of that funding is going towards investment. Whether you just starting out and you're gonna do 1% to 3%, or whether you could do 5 to 10, whatever it is that you could do, always think in terms of and so I practice this with dynamic 3D a lot on, okay, if you're gonna sell a bottle at $10, then one of those dollars need to be going towards your investment account, or two of the dollars, or whatever. But whatever it is, don't think of it as a whole $10 profit. Think of it as maybe an $8 profit or a $6 after, and probably after expenses a $5, right? And then that way in your mind, you will understand that, okay, even though I charge $100, I'm only taking home 40 because I need to break down the other 60 in my expenses, my company, and my investments. So I'm gonna twist up. Got some powerful stuff on the ground I'm about to do. Because in order to stay ahead in this consulting game, you got to know how to how to get some people some revenue in their pockets. And many people just out, oh, I can get you a contract. Oh, I can get you a certification. So I'm saying, no, I can teach you how to, when you do get that contract, how to make your money work for you by
Right.
doing this, and this, and bringing that aspect in of, hey, you need to get some investment training, or maybe you need to get with a funder, whatever, however you're going to do your money. But this is important because now you can actually self-sustain, and you understand it, how to do it right. So
Right.
I'm hoping, that particular twist will kind of, I got some clients already, they already on standby because everybody's like, okay, she bring a different twist to the game. Oh, I know. That's why, I paid all that money for school.
Hands-on experience, right? Again, you didn't get here, again, not, going through the growing pains in a lot of ways when it comes to that, how people receive information, right? Because some people will have what they call, implicit bias because of, the most, silly things, right?
Yeah.
Is if
Yeah.
information is correct, as they say, the truth don't care who tell it, right? Right.
Don't care who
Even a
tell it.
murderer can tell the truth, right?
Yep.
And it's hard people to accept that because it's coming from the lips of a murderer, but the truth is true, right? It don't need, a spokesperson, right? It is gonna stand on its own because it's, at least we know it to be, very, right and exact information. And so people even get hung up in that because they, they too busy personality work, in watching people from their personality or their bank accounts or what they got. And again, the most silliest of things is if that has anything with them learning how to be more, solid in their growth and endeavors to be better business people or whatever. So it's
good
hard to get,
stewards.
just good stewards, So that's why I tell people, man. So you eliminate a lot of that, which is hard to do because again, America bred that in people that they have to be so competitive, right? America as a whole, the corporation is a very competitive environment where if you don't, if you don't work, you say you'll move your feet, you don't eat. It's the most, one of the most expensive, pieces of real estate to live on. Why? Because, there has a lot of incentives to potentially want to be here, but ultimately, the way things are headed, they're pricing in their mind the undeserving people out of the market, right? They're trying to figure out how to do away with the middle class. In a lot of ways, it's sad to say that. Either you're gonna have it's gonna be have and have nots, right? And that's not just being, kind of hyperbolic in that statement. Why? Because if you just follow again the numbers of the wealth gap, this increase that just came out of COVID alone will let you know that these people are aggressive now in trying to really further it. Why? Because not only did they leave the corporate boardrooms, they got into the space of what the American, dream is supposed to be about in terms of being able to pursue the land and happiness. We know that's crazy, but the ability where you can own property. Now you got investment bankers buying property up now, becoming landlords. Let that marinate. They got the money to do it. So they're taking cheap money, printed money from the feds, that's fiat currency, utilizing it through asset bubbles that are being printed because everybody's chasing stock, and then running out there buying real hard, tangible assets with that money.
Yes. Ain't that crazy?
Hustled. Can you say hustled, everybody? Hustled.
And they always calling my phone. So try to get mine.
And people scared to get a credit check to help themselves out in this situation.
Man, I don't want to hear
it's
people
wild
talk
out here, guys. It's wild, and speaking, matter of fact, we got a person on here just went through the process of becoming, a landlord, right? Duplex owner in the building, Mr. Marquis Kid in the building himself, Crypto Kid.
AKA True Hustler.
Right?
True hustler.
Right? People using the system in a way, in the proper way to get to set, hit set goals and hit, get to that point of being able to use the system at its, at their advantage, right? He definitely can speak to that. Over Marquis, man, what's going on, man?
Ain't nothing much, man. How's it going on, fam?
Peace.
Peace to the family. Peace,
brother.
Peace. Yeah, I mean, it's been an interesting journey. It's definitely, especially, doing this in a pandemic, or I don't know if we call this post-pandemic, but I guess it's just pandemic, like
intermediate pandemic. We in the what they call halftime show. It's a halftime show. Everybody want to be a halftime show.
So yeah, it's been challenging working with the city, regarding licensing and things of that nature. But it's been great as well. Just it's being like something that you you thought about doing, you dreamed about doing, and you actually manifested. It's crazy. So it's definitely been interesting. I got a triplex.
See, corrected. More bang for your buck.
Yeah, hey,
right? Right? More bang for your buck. Hey, don't show up that last tenant, but don't show up my tenant. Don't show up my tenant. All right, don't show up still my tenant. I love it.
Yes.
And again, just the stand of you realizing as well, like many other people going down that road of, again, moving across all the different, asset class, because asset real estate is an asset class value in itself, right? Coming from an investor perspective, right? Like we all have, from the ranks, right? Up from an employee to, with a business owner or investor, and now, an equity asset holder of property, et cetera, man. I tell people it's all universally connected. Once you get in the ideal of realizing the power of entrepreneurship, right? To keep looking for opportunities to grow, financially, through financial literacy as a whole, using the assets out there. And here you are, you just did this during a pandemic when most people were sitting on their hands, waiting on Mr. Charlie, the government, whomever, and didn't want to take partake in having this time off, a mandatory time off through quarantine to learn different skill sets, different asset classes, different ways to grow money, which a lot of people did. They got smart, start making masks, they start making their own hand sanitizer, putting shea butter in there, everything. Right? Even the country.
You ain't lying. Got me somebody butter.
Feel me? It's not hard, in that regard, to figure out how to make a little money, right? Again, people sitting on TikTok, you're getting tens of thousands of dollars every month just by goofing off on TikTok. No real tangible skills besides entertaining people, goofing off, court justice stuff. Again, that ain't hating on that. Just saying there's a way to make money in any kind of environment. So, but those who have real tangible, skill sets or whatever to offer, they're kind of still just waiting. I don't know. What are you waiting for? Like people out here getting money. So again, the brother went out there and made it happen. Again, a triplex during the pandemic. Let that marinate. So yeah, speak to it, over Marquise. Again, you got long-term goals. Of course, I know this ain't the first. The only, I should say, not the first, but the only, because you probably gonna want to expand at some point, and that's what this stuff does. And once you figure out how to get through all the, the things that you thought were obstacles and hurdles, or the fear, that comes along with, taking on such a big responsibility like that, you were like, oh man, once you get the experience, oh, I can do this again, right? I can duplicate this. You see what I'm saying?
Yeah, exactly. We had this plan for a while. We actually had a mentor. I'm pretty sure you're familiar with him, Julian Gordon.
Yeah, we know Julian Gordon. He from
Yeah. So
Louisiana.
I went through his program, honestly. Have been planning out for a while, and the plan was, to live in this one for a year, and then we're gonna
that's all required of a loan. That's all required of that loan, especially if you get a VA loan. It requires you to live in the property at least 1 year. After that is let's go. Right? Let's go.
Exactly. Then we're gonna, probably go to Atlanta and do the same thing.
Right? Duplication. That's what it's all about. That's how you grow, right? And so that's why I say, once you get past a lot of the, I guess, the barriers or the fears, then you realize, oh, okay, this could be duplicated, right? This could be duplicated. That's due diligence. It got you there, right? That wasn't happenstance. That wasn't guesstimation, right? That wasn't, any of those things, right? That was due diligence and understanding. Again, how to, make those things come to fruition. So I tell people, man, knowledge ain't, people running from, learning stuff, right? They want to do always, throw the instructions away. Man, you get a new toy, man, throw them instructions away. You go out there and set fire to it. Matter of fact, I don't need that, Gertrude. I got this. You got all kind of rusty tools out there.
You said set fire to it. I don't
You gonna set fire to it, man. That's man law, bro. We don't read no instructions. We just go straight to grabbing tools, bro. Let me get that 1/8 socket right there, boy. I know your name.
Give me the crescent wrench.
Right, give me no crescent wrench. Well, I got in here. But see, again, there's power in knowledge too, because again, some things do require a more meticulous nature, so. But in all things,
when you talk about the instructions too, man, just like as far as paperwork is concerned, you really have to be on point. Like that's what I discovered.
It's legally proper ownership.
Slip fees in on you, do all kind of stuff, and you legally binding yourself to so many obligations. So you really have to be on point, make sure everything is recorded, and I appreciate the fact that I went into most of this knowing as much as I could know. Like I was right along with all the contractors. You know what I'm saying? I researched how their profession works and what they're gonna look at, and watching videos before we even went to the meeting. So we looking at the same thing. I'm like, oh yeah, that's what that is. You know what I'm saying?
That's what's good about it. That's the part where they say it takes a village, because literally information is free if you learn how to source it. You know what I'm saying? You can find information or answers to a lot of things. Avoid feeling like you have to go out there and pay a lot of people for it. If you're just willing to put in the work to do it yourself. If you already cut from that cloth, that eliminates a lot of the fear of thinking that you're going to mess it up, because you're trusting your intelligence, right? You're trusting the fact that you can back test a lot of information. Even when you're not uncertain about things, you can back test it against online legalese lawyer forums. Now they got that stuff out there where people just give you the game if you take the time to research and just search better, right? Some people give up after the first try, like, see, this is why. Okay, I'm just gonna go and pay money. Like, no, you don't. No.
Yep.
So you're doing it the right way, bro, and I love it, man. And shout out to you again, because again, you get it, right? You've always got a lot of us who realize that again the power of entrepreneurship in that regard. We don't leave stones unturned, leaves uncovered. You keep researching, and to the point where you can't go any further. Then after that, you make executive decision what you need to do after that. But you're not lazy. Is the point, right? As we know, investing, trading, and entrepreneur endeavors are not a lazy man's game, right? You can't, feel your way through this. You have to actually know knowledge is important here. Right? Knowledge brings power. Power equals profit, right? One of our favorite things for that reason. Right? So shout out to Open Marquise in the building, brother. Savvy Enterprise. You see his marquee banner up here on the screen here, guys. Savvy Enterprise. right? Again, I like that too. I like that. I mean, y'all see that there, right? Right? See, what I'm talking about. That's what I'm talking about.
Appreciate it.
Yeah. So continued success in that, and you're only going to grow and further more and more. I have no doubt within that. So 10 years from now, as we like to say, we look well into the future. We're starting to realize the power that, especially a lot of Black folk, that we don't have to worry about one coin flip to the next, like Oprah Brandon was saying. Now we can start looking 5 years into the future, 10 years into the future, right? That shouldn't scare you, Black folk. Trust me. Don't get scared because you got to think 10 years in the future, right? Stop trying to be convinced to live in the now, right? That's a false narrative. Trust me. Don't think it like that, right? Start thinking 5 years in the future, 10 years in the future, 20 years into the future. It'll help you with your discipline. It'll help you with your due diligence, and you'll see that eventually it'll equal dollars when you start making better executive decisions for your situation, right? And your finances, that being through proper education, right? So shout out to Brother Marquise once again in the building, dropping, jewels as always. And again, showing you that why I tell people I go to war with these guys every day, because again, we realize that we've been battle tested, by equity markets. We've been battle tested by information and all that. What better, people, to go to war with than those who already understand. All right. So shout out to him, right? So, all right. So I love it, man. So again, that's the hedge, right? He hedging against what? Poverty. You know what I'm saying? That's what I look at it. That's a t-shirt moment, right? Learn how to hedge against poverty. Think about that. You got to be, gainfully employed and seeking opportunity to hedge against poverty. It makes sense to me, right? Because again, if not, you sit on your hands, you're going to, the word going to eat you up, because they find out, how to continue to take money away from taxpayers and put it in the hands of wealthy people, right? With or without your consent, So how are you going to fight that battle thinking that, trying to appeal to the morality of a nation that never showed an ounce of leniency or morality when it comes to taking, right? Again, whatever. Moving on, bro. Moving on, right? All right. So it's Sister Shanika in the building. She done popped in here. What's going on, Miss Leno in the building? How you doing this evening? All right, she popped in and popped out, but she be moving, boy. She'll be busy. All right, but yeah, so y'all guys get it. Again, that's what we're talking about here. Just hedging, no more, no less. And shout out to Brother Snotball in the building. He came in the house. Our brother More Truth in the building as well. Right, everybody that may be listening on again, Twitter, Facebook. We welcome you guys, and we appreciate your viewership and patience to the channel, and just realizing that this is all about being able to hedge. So tomorrow, again, we do got firework event. We have a binary event. We have CPI data coming out tomorrow.
I was just everybody
go ahead.
5 years ago, when the mentorship class started, everybody was in a different place than we are today.
True story. We kicked that thing off in 2017.
Kudos to everybody, man.
Yep.
Kudos to everyone.
Wow.
Think about that. We kicked that thing off in 2017, and we've been, and this again shows a testament of not only our individual journeys, but collectively, where we say, as Sister Sherry say and still says to this day, get your team. Right, she used to say back then, get your team in 2017, right? Then she said, get your team in 2018, 2019, 2020. She had to come up with a new rhyme, but nonetheless, you knew what she meant, right? That's the reality in that. It's just that, you willing to, you want to be around places and faces and spaces where people have those, again, like-minded interests as you. As I've said many times, there's no such thing as permanent anything. There's only permanent interest, right? That's what drives you out of bed every morning, the interest to want to survive or thrive or however you look at it. And you have no problem with being in those spaces because you see people are aggressively trying to learn just like you, right? So they're not slacking, even though there's no bar over the head that they got to keep up at the pace of everybody. We always tell people, learn at your own interval in this. There's no pressure. But at least that person has the interest because they're willing to get the knowledge properly, right? So, that's a great point over, Chris, because it just shows the extent of how we've been at this, right? As people say, we got a body of work, right? We got a body of work behind us. And it doesn't necessarily mean we made it or we this or we're that. We're just saying we steady on the grind like everybody else, right? We're not slacking in that regard to want to get better, right? And the gains are definitely, proving themselves to be definitely at our reach and disposal in that regard too, because it's showing, Sister Monica just gave you an eloquent, detailed breakdown of what she went through and how it's starting to make sense to her. Because I always just say, wait till you have your Neo in the Matrix moment. When the market slows down, you start seeing them ones and zero like the Matrix. They're like, what? You're gonna let me in here? They're in trouble now. They're in trouble. Well, let me in here. I'm getting it now. So that's the part about this game I love, right? So shout out to people who realize that. Again, marathon, not a sprint, right? So Shanika, you and pop back in? I don't know if she's able to talk in that. She might be trying to get her stuff together, right? Audio maybe. Anyway, but that's it. So again, the hedge, right? The hedge games, right? That's why we put together, like we always do. I value that. It's okay to be, cautious and concerned, right? You got to realize that being a curious investor or a curious trader is a good thing, because it'll give you that ounce of pause before you jump out the door, right? Or jump out the window, right? Because again, the market will have you chasing waterfalls, and it ain't what it is, right? So curious investors are just, people who are conscious about the situation. Before you jump out there, you want to be thorough and knowing that you've checked all the boxes of interest, right? As I like to say, the 4 pillars, right? The 4 pillars before getting into any trade or investment: the what, the why, the where, and the when, right? If you cannot answer at least 3 of those questions, do not take that investment or that trade. Why? Because that means you're not convicted properly and knowing that you're finna make that kind of level of executive decision rightfully, right? With an exact value, knowing you feel good about your money is finna, precede you in a proper way. So as we say, what you're investing in, why you're investing in it, where you should think about investing into the play, and then when to pull the trigger, right? That's why we say the what, the why, the where, and the when. I call them the 4 pillars, right? Of any good savvy investor or trader, knowing what to invest in, why you're investing in it, where you should think about probably investing into that stock, and then when to actually pull the trigger, right? That eliminates a lot of, in my opinion, a lot of the the hesitation that comes along when people don't know, when is a good time to buy, when to get out, all that kind of stuff like that. You got to have an entry and an exit strategy every time you go into any stock, or anytime you submit your money, I should say, to markets. You got to have an entry strategy and an exit strategy, right? And hopium is definitely not a strategy, right? You can't hope money just falls into your lap. You can get lucky, but you won't be consistent, right? So again, it's okay to be a curious investor, right? So that's going to help you become, again, a more thorough investor in the end. All right. So Sunika, you there? Hey, see if you pop back in. She might got anything to add or not. She might just be busy, just hanging on the counter. So again, that's the name of the game, guys. So with that being said, again, we wrote a little song, but I'd like to hear it. Here you go.
I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. Now you be surprised at the info you get is by letting them talk, so I'm letting them talk. Gotta keep quiet, maneuver in silence, then let them in, chalk up their body, another one body, that's just how it go. I got some secrets, I'm shaking the game so they stay on their toes. Stay in your lane, how to stay on the go. I can play with the pros and act like a rookie, so they overlook me, then I double up again, none of their knows. None of them cold, they just got lucky but never adapted, so I'm to the one if it's coming to blows. My enemies cutting it close, I let them think that they got me, but what do you know? I had them beat before we ever spoke, I'm ready for smoke. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. Now they ain't go harder than me, they need a blade in a sheath, a shank in a piece, a crate full of heat, an army, a fleet, a tank and a jeep, a navy at sea, with ace a marine, an ace up their sleeve, a team of marines, a freak on a leash, a beast with an appetite, razor for teeth, and still they will lay at my feet. Boy, you got the wrong one. I gotta look over all of my publishing statements for Q1 as soon as the song's done. I gotta call up my mama and tell her I made it as soon as my log's done. I gotta read all my trade publications and sip my tea till it is all done. I think it's all fun. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George. I hop in the Porsche, 5 and a horse. I'm ready for war. I'm coming for throats to turn to a ghost. I need to know everything. Now you be surprised at the info you get is by letting them talk, so I'm letting them talk. Gotta keep quiet, maneuver in silence to let them in, chalk up their body, another one body, that's just how it go. I got some secrets, I'm shaking the game so they stay on their toes. Stay in your lane.
All right, that's what we trying to do. You know,
That's
we want it, right? You know, the curious investor. That's what I titled that, the curious investor, right? Because you know, Joke will be out there, boy. Hey, you'll be getting so much information all over the place. You don't know how to properly dissect it. You just be chasing one moment to the next. So again, slow it down, breathe, think about it, right? Stay within your lane, so to speak, as they say. So that way, when you see things for what they are, you could be, make better decisions. So in lieu of that, with the CPI data that's coming out tomorrow, a lot of people are gonna be looking for either, number one, excuse to kind of continuously, take, the stance that the bull market is ever, alive and still thriving. And some people are gonna take, well, no, there's a reckoning that's starting to kind of, surround the market at this point. So I want to be a little bit more cautious and prudent within that. And then it's gonna be some people who are going to be in the middle, just saying, I'm just not going to do anything. I'm just going to sit still. I'm not going to chase it, or not necessarily trying to, even hedge against any particular downside in that regard. They're just neutral. But either way, however you try to cut that cake, you gotta realize that information is out there for your benefit. When they're telling you that the party is starting to kind of get the liquor pulled and the lights about to get cut off, do you still continue to stay partying, or do you say, okay, maybe time to think about going somewhere else possibly, right? In this case, that's what we do, because the party doesn't end. It's like the market doesn't go to zero. It's just that there's a rebalancing of opportunity, right? When you move away from those stocks that are very, very overpriced, and you start finding those who are a little bit more undervalued. They're making use a little bit of that love, that new money love that may start to move around. So that's what we advocate here, right? That's what we're advocating here, right? So again, it's okay to take profit, guys. I repeat, it's okay to take some profit, and it's okay to also learn how to rebalance a portfolio, to diversify your portfolio, even in your trading schematic, right? When you just used to buy Tesla calls all the time and Apple calls all the time because everybody's use that as defensive plays. Well, there's some other plays out there that's starting to wake up now, and you can now find those stocks too, because it's not hard to, again, go to Google, put in what are some of the best value stocks of 2022, right? Again, not rocket science to do stuff like that, right? And you'll learn also what a lot of people may be thinking about in terms of where they may want to shift some of their money to, right? You'll go so much more further in learning how not to be a one-dimensional trader. You'll learn so much within that, is my point. And you'll see that the market is very vast. Like I think Oprah Chris was making a point about that last time we was on, maybe earlier, that there's more than one stock that you can trade. There's a lot of stocks out there, right? You might be used to a certain set, and that's all that's fine. But it's okay to expand a little bit, right? It's okay to expand a little bit, right? So we're ready again. So however you look at it, the market is definitely in itself is still a great opportunity, or a vast land of opportunity in itself. Just gotta learn how to play by the rules of engagement, right? So we love it, right? We love it from that perspective. So with that being said, guys, I don't have anything else really. Brother Robin said, yeah, man, whew, man, I tell you, yeah, Robinhood still got some problems, right? We figured out they just banking money. Right? They ain't really doing nothing to really, really improve the platform. Webull came in and took their lunch, right? Webull keep expanding almost like every week. It's like Webull got something new, right? Robinhood is still on that same old foolishness, right? But nonetheless, we know that people love that, non-commission value, even though a lot comes to non-commission, but there's no option fees. They just give you 100% zero value, even though Webull gives you that too. But people just love Robinhood for some reason. The reason why a lot of people still stay on Robinhood, I know what it really is, because again, I've been on Robinhood like for years, like well over 6 years plus. Somewhere around, we were hitting Robinhood way back when it was just used to have the old ugly setup, right? It didn't change something over the year, but it's the fact that their instant deposit thing. Anytime you do an instant deposit with Robinhood, you can invest in options right away with that money. So you can't do that in most of these other platforms, right? Because they want to make sure that money clears first. Robert like, no, we're gonna loan it to you out the gate. Why? Because we figured out and found out that their clearinghouse was what? Citadel. Citadel was willing to take the risk and being a private banker for Robinhood in the flip side that they would collect all the order flow that came along with people chasing stocks through having the ability to get instant deposit value money to use with leverage to trade stocks with. So they'll say, okay, great. So what everybody piling into? That's what they're trading in. So we just trade the opposite of that. We're hedged against them. That was the whole scandal. So that's the reason why people stayed with Robinhood, or they were using Robinhood from that regard. See, TD Ameritrade ain't gonna do it. Webull ain't gonna do it. They need that money to clear first, right? So it wasn't hard to figure out. But anyway, but that's it. Outside of that, man, there's a lot of other platforms out there coming up now that's challenging Robinhood's supremacy in that regard. And look, there's a lot of stuff out there. So, like I said, I came up in the school of TD Ameritrade. I think so. Shanique, you just asked that question. What's my favorite trading platform? If I had to pick just one, it'll be TD Ameritrade, hands down. All right, that's just me though, because they're the most technical platform that's out there. Right now, there's other one like Schwab and E-Trade and E-Trade Pro, Interactive Broker. That's next level. That's more business management style. You got to have some bread to be Interactive Broker. I mean, you can come in, less, but they're very intricate, right? But TD Ameritrade give you so much within their platform. The Thinkorswim platform is just underneath the whole TD Ameritrade brand in itself, and the education, the different scalability of the platform, whatever. So that would be my favorite though, right? If you can learn TD Ameritrade, look, you ready for anything. Because this is definitely, really scalable in terms of knowledge and the instruments that's on it, the information that they harbor on it to help you become a better trader. We learned. That's what we learned. Right? We came up in that lane. Y'all been down the road. Obviously, over Marquise and our brother Brandon. Y'all been the old days in Discord. Like we used to stay up all night. We was using straight TD Ameritrade. We wasn't using no Robinhood. Our choice of platform was TD Ameritrade. We do the on demand, right? Going back over old trades and just literally doing play by play like an NFL scouting report. That's how serious we was about this stuff, right? I mean, I was out way into the AM hours of the morning, so we came up in that environment, and so it's well served information today because it made us better people.
I never left that environment.
Likewise still to this day, even though new platforms came, we still we know where it's at.
I'll be up 2:00 in the morning back testing.
See, that TD Ameritrade, you can't beat it, man. Like Buddy Lee Jeans, you can't beat them, boy.
Yep, and Trading View.
Yep, old school. Right? Again, that's why I use it, of course, for charting from that regard. And there's other ones, people out there got other stuff they like, but again, that's just me. Like some of us who realize, what works for you, is just a way to kind of continuously help you build on your skill set, right? And so a lot of these platforms out there, they got great values and at this point now, but hey, you want to get your hands wet, definitely go try to, go tackle the things that seem to be complicated, because if you figure those things out, everything else will be somewhat more easier for you at some point, more applicable to you, learn it faster, right? So that's why we say time, like charting time, right? They say you haven't made it till you go over at least 10,000 charts. But guess what? Play with those platforms. Go through those different features that they have. That in itself is a value of what? Charting time. Why? Because you see how it's all connected with the indicators and the different oscillators and the different things you can use to apply to a chart, the information, how it applies to a stock, what it looks like on the chart, on the chart. It's a lot, right? We'll be here for days, but that's what makes stuff endless. It's an endless, vast plane of this information. All right. So Trading View, TD Ameritrade, there's so many others. Man, it's a lot. It's a lot.
MetaTrader 4.
Yep, even for the Forex side of the thing, they do crypto and Forex and equity.
They got stocks now too.
Yeah, was it and equity, right? That one didn't expand it, right? Because it showed user growth have expanded so much to the point now where they got to canvas all walks of it now. That just shows the expansion of how these platforms have grown, because they've been offering a great, service, to investors. And that's why I say the land now is such a competitive landscape, because the commission thing is gone now. Man, look, jokers are up in their game now, right? They gotta find other ways to get people tracked to stay on their websites, or they, on their platform. So they expanded, right? They're definitely expanding.
One other thing that's good about the stocks on the Forex side too, over like when you play the stock on the Forex side, you don't have to worry about time decay that you do with options.
Mm-hmm. That's true.
You know?
That is so true. You know, so, I mean, a lot of stuff out there, and those are the platforms. Before you can get to a lot of the publication that we speak about a lot, you know, that helps aid that in it too, because it's all of it is, you know, is in it's in tandem to you, you know, making it all make sense. We like to say dollars and cents. That is, make it make sense, dollars and cents, right? And just notice that too. Cause Susan Trading Travel, she used that lately. I saw that on one of her little marketing thing. I said, oh man. Nah, I've been saying that for a while, but I hope she don't trademark that because I like that. I've been using that for a long time. But that's it. You got to make it make sense, dollars and cents, as I like to say. And so these other platforms that use this stuff in tandem, you know, like a FinViz, right? Like how long we've been using FinViz? Like forever, right? That's another one, right? That's old school, right? It's not a trading platform, but it's a, you know, kind of like the same way you use like TradingView, right? It has so many different, you know, instruments of opportunity to learn how to break down, you know, this, you know, very minute values of stocks, sectors, industry exchanges, data, you know, signals, channels, what I'm about to say, but patterns, trends. It just really helps a novice investor really get a great understanding of how this stuff is all kind of, you know, mapped out, right? It's a mapping, so to speak, of how to use this market. And so even with the heat map, as you see on here, the heat map I have up here to show you which sectors are moving throughout the day. You know, that, you know, at the end of the day, you see how they, you know, how well they fared against others. So you can kind of do a, you know, comparative contrast in terms of industries, you know, in that regard. Again, if it be news, if it be, you know, per se, let's see what else. Of course, there's a lot of things on there, of course, but a lot of things I think for the most novice people, they trying to look for, you know, the most elementary things that you first learn is what? Patterns and trends, right? What is this type of candle? What is this pattern, right? Once you start to get those things down, then you start learning how to, you know, apply it to a bigger picture, right? Looking to the left of the historical aspect of a chart, you know, and then it gets really fun from there. So again, FinViz is one I always say, man, you need FinViz in your life. Trust me. You know, I mean, they're no Bloomberg terminal, but when it comes to what they call rapid fire, you know, their server value to be able to kind of turn over information. I mean, that stuff is free. I mean, it's literally free, right? $3, $3.99, right? But you can get a lot of this just using this, and this is the free version. It's just not even the elite, you know, package that they offer. This is the free version. You can kind of stay on top of a lot of that information, like actionable intel, you know, and as much as it can in real time and pumping out news for the average investor. So, I mean, it has a free screener. We went through that several times, how to, you know, utilize the screener to your advantage. How great, you know, of a service is that in that regard. Let me blow it up. You can see it really big. And helping people also figure out how to, you know, invest in stocks or opportunities that align with maybe their budget, their strategy, right? Their risk, you know, profile. This helps you do that. You can really isolate a handful of stocks that, you know, fit your category, right? So you can really be picky and choose. You could be choosing, right? You're out there choosing, right? You at the club, you choosing. But you can do the same thing in the stock market. You'd be very choosy. And you can find things that align with your interests. Right. So again, we know about the heat maps. Again, it has the grouping values in terms of you know, performance, relative performance values in a day, right? Through industries and whatever like that, right? For the week, the month, you kind of see which one's been doing well. So you can very well see, you know, where the strength is at. And at some point, if there's a rotation about to happen, you might want to start looking at what the laggards see. So utilities got beat up today, right? I mean by a lot, right? They had a negative 51 and you had even energy up like 3.25. So at some point, when that sector gets a little oversold because all the people chasing these sectors, at some point, this one will bounce. See how that works? That's just about what? Learning how to what? You know, find those those undeserved places at some point, and you start hedging against a lot of the overbought ones, and that's just another way of what? Rebalancing in the markets. Not rocket science. You can see all this stuff in real time. Again, free 99. Right? 3-month average, 6 month, half a year annual. You can see where all the froth is at, right? So consumer cyclicals is still showing to be what? You know, the lagger for the year. Well, guess what? That's going to change going into 2022, right? Hint, wink, wink, right? Because everybody was chasing what? Energy, real estate, and technology, other stuff. the consumer cyclical were left for dead. So a lot of people may start rotating some of this money, maybe down into some of these healthcare, consumer cyclical, consumer defense, basic materials, and what utilities. See how that work? Not rocket science, right? That's the moment when you're supposed to have your head explode, right? Jiggles don't even see it for what it is, but that's a part of hedging. Because again, that was yesterday's news in terms of the stocks that benefited before. Not that they still won't, but if money is fleeing from cheap money, quantitative easing, then a lot of it is going to be chasing some of these more undeserved plays that actually have a good setup. You still got to decipher which ones in that space are great setups too, right? Not just like it's free fall, but it just helps you see the strength that you can now utilize to help your situation. Make sense? So again, free 99, right? So you could do a portfolio tracker. As you see, I got my, I'm in there. Right? You could do a portfolio tracker. The insider information, like who's selling, who's buying. That helps a lot of places, people, especially who trade options. Stuff like this is really good because sometimes you have people come in and buy certain magnitude of stocks or sell a lot of stocks that may hurt the stock. You make it use that as a trading investment thesis. And as you see on here, it's set up in basically they in real time, January 11th, right? There you go, right there. Stuff that's been happening all today that people been selling or buying. Look at them. Options exercises, selling, buying of their stocks. All right here, free 99. Look at all that happened today. Look at all those data. All that's January 11th. And it's still people that will be selling throughout the night, right? So FinVid is sitting there tracking it and giving you this information right now in real time. You can see the exact number of how much they sold, for notional value and the number of shares that they may have falls in ownership. How actionable is that? Falls good information. It's a lot. Shows you whether or not, if it's scheduled or it's not, or if they believe in a situation or they not. They're just trying to sell before earnings kick off. Because guess what? Earnings cycle kicks off tomorrow. Q4 earnings kicks off tomorrow. So if these people are selling ahead of the earnings, how much are they selling and why are they selling? Do they know something that we don't know? Possibly. You can also inculcate that into your investment or trading thesis. Let that marinate. See how that works? So it's expansive. So futures market has all that Forex stuff from a Forex traders out there. Again, the one of many. I mean, nothing new here, but we like to talk about it. Crypto, we want to show, like we always said, just different ways you can look at this opportunity. And these all have a set that says back test, but you got to pay for that course. But you can learn how to back test on your own, right? Every time we come on here, we basically show you how to do that. When Marquise there for breakdown stuff and Social Camille, of course, I'll show you how to do it too. But it just shows you the extent of how to back test your information, basically how to falsify, information, the scientific method, so to speak, right? To turn speculation into potential value of a technical fact, right? So we look, guys, there's so much out there. So if you're a novice person, there's so many tools at your disposal. Don't hesitate to get out there and figure out, how to utilize this stuff to your advantage, right? So that's what when we come on, we share this stuff. It's for your edification. Lock it in, right? Lock that stuff in. They say lock it in, right? Copy this stuff. As I say, find your own niche, but steal from everybody. Why wouldn't you? Right? Why wouldn't you? Thank you, Oba Snotball, for that. Just looking in the back chat, man. Peace, power, profit. I'm humbled by that, man. Thank you for that. But you're right. You say, Oba, do you recommend a newbie start with learning long-term buy and hold stock picks using fundamentals rather than trying to learn options or day trade? 100% unequivocally, yes. Why? Because we realize that when you realize like how to look long-term, over time, you'll learn how to condense that down to 3 months, right? Or let's say 10 years, right? We use the Warren Buffett thesis, as they say, right? You should never think about owning the stock for 10 seconds if you don't plan on owning it for 10 years. Now, imagine that. Again, like we said earlier, how many people got a long-term 10-year outlook perspective in play or game plan in play? Unless you're pursuing equity in home ownership or business, it's hard for people to accept that in terms of just being an average employee, right? They say, well, can I see myself 10 years at the job? A lot of people can't. Some people can. Depends on your outlook and what you're trying to do for what your goals and grow. But as an investor, look, you get into the driver's seat day one. You control the ship. You control the car. So it ain't hard to start thinking like, okay, 10 years in the future, I would say, think about it. Like when I use the way back thesis, when I say, well, what was y'all doing, 10 years ago, 20 years ago, right? And you say, man, I was probably out there just spending money, blowing, I was wilding up, turning up, I was, somewhere doing whatever. And then you say, okay, well, let me show you what some of these stocks were doing back in during that time, right? Especially if it's a generational, innovative value that's happening within sort of a cycle, you can say, well, during my time, this was the Apple of my time, or the Microsoft of my time, or the Ford of my time. You'll see the level of the growth that has happened in that industry or that stock over that time frame, and you'll be like, oh man, imagine if my mom or my dad bought me stocks for my first birthday, as opposed to buying me, baby, toys, right? As opposed to, buying you that, they bought you stocks and got you the prospectus hung it up on your wall in your little baby room. And just, hey, sit on this here. You're gonna thank me later, little Henry. 10 years go by, 20 years go by, you're like, bruh, I'm so happy they did that. Think about that. Well, guess what? Some of y'all are parents now, about to be parents. You need to start thinking like that like yesterday. If you haven't already, you need to be thinking like that today or yesterday. Why? Because now that you see the power of this, why would you short your future generations going forward? Like, that would be back hustling in itself. You know the game, you're learning the game, but you don't want to be responsible to what? To use the game to your benefit. That's crazy to me. That's just me, though. That's the way I think. Of course, I'm not saying everybody has to think like me, but I don't see the need to not to want to do that. That's the whole point of being what? In control of your destiny, as one would say, right? So, yeah, 100%, Brother Snotball, you would definitely want to learn how to be a buy and hold out the gate. Everybody has to learn that way, because a lot of people try to jump out there, it happens. You want to make money fast. You see other people making money. It's exciting to see people making money, especially your peers, right? Imagine you come into a moment, spur. Let me teach you how to invest and trade. You come into a forum one day and they say, well, come hang out with us in our Discord, our little group. And a joker posts a game for the day. And a joker, they made like, $2,000, $3,000 in one trade in about 2 or 3 hours. Imagine what that's going to do to your psyche. Oh, I could do that too. You jump right out the gate, right out, you're not on all the proper knowledge, but that's not how this stuff works, right? Of course, you can get lucky, but we don't want to bank on luck. We want to bank on strategy and understanding and proper knowledge, right? So we always going to teach the long way, right? There's no shortcuts in being a master of any craft, right? There's no shortcuts to that. Why would you want to short yourself from the knowledge of being considered the expert, right? You left no stone unturned, no leaf uncovered. That's a part of knowing that you're convicted in what you know. So by all intents and purposes, I tell people, the buy and hold strategy, learning that out the gate by understanding fundamentals, how to track a company, what to look for as far as SEC filings, right? Learning all those SEC filings and how to sit through an earnings call, what to listen for, the different terminology when you're dealing with certain industries, and if it's MAU, DAU, if it's SG&A, if it's all these different terms, the M&A, when you hear all these different things like that, R&D spending, CapEx spending, you start hearing all this stuff in SaaS, right? Subscription as a service, because we know we're a service-based industry now, meaning in America, you know exactly what SaaS is when you hear it or you don't hear it. Oh, they speaking about SaaS, subscription as a service. So that means this company derives a lot of the income through how many people maintain a subscription through their business model. Like how much that weighs into their revenue every month, right? Or every quarter, right? That stuff is important. You learn all this stuff in value of a fundamental assessment of, learning the nuts and bolts behind the company, what makes a company run successful. Make sense? So essentially, again, you get a crash course on being an executive or a board member just by following the information that they're putting out through their SEC filings. Let that marinate, right? That's a form of power, because you can apply that across to the board at that point, across any other asset class that has a fundamental story. The only one that you really can't is because of Bitcoin, right? It's utilitarian, right? It's a different asset class, store value in that regard. It's intrinsic values in terms of what people use as a hedge against that ambiguity of equity markets that are being based upon whether a company can do bad or meet a certain criteria or numbers or not. So once you realize all the scape in terms of all the asset classes, Forex, crypto, how it's all set up in that regard, you know how to play ball on any field. On any field. That should excite you guys. Why? Because you ask yourself this one question. If I ask all y'all right now that's listening, on YouTube, Twitter, Facebook, do y'all think the stock market can close down or cease to exist in the next 5 years? What would y'all say? Obviously not. Well, what about the next 10 years? Obviously not, right? Well, maybe 15, 20? Well, how about 30? Let's say the next 50 years. Do y'all think the stock market gonna shut down the next 50 years, guys? Anybody? Probably not. So think about that, right? How long has it been open, right? So the reality that if the world's wealth is stored in equity ownership or equity assets, right? How could you convince yourself that you shouldn't actually try to be a part of that in some form or fashion, knowing that you have free will to access all this liquidity of trillions of dollars to use it for your benefit in terms of helping you create wealth. No matter where you at in the process, right? You go through ebb and flows like anybody else, but it's about fine tuning your situation. Over time, it begins to really work in your favor. See, that's the power within this. So, by all intents and purpose, again, you definitely want to realize that this is a marathon, not a sprint. So people can't hold you to some kind of form of accountability, saying that you got to learn right away or you don't get the job. You don't, if you don't make good grades, right away within this semester, this quarter, then you can't move on to the next level. Well, guess what? You don't have to worry about that here. You can do this on your time, on your free time. Learning how to allocate an hour every day to learn this stuff in itself is a boss move, because you're taking your financial future and by the reins, and you doing this literally using the community university of free information. You don't have to shell out tens of thousands of dollars in the tuition to learn this. See how that works? So I tell people, man, look, man, if you could sit around and watch the growth of some of these stocks, how they didn't turn over, it's almost like disrespect, right? Because why do I say that? Because you've been buying these products for like 10, 20, 30, 40, 50 years, and you've yet to figure out that the power of also being a patron of a good product that you may like, that you've been buying all the years, you could have been invested in the company in the same breath, because apparently they stood the test of time. Make sense? Right? Again, we always use our great old American Nike as a real benchmark. A lot of especially young folk or even older folk. Now we came up understand that our shoe game is extension of our swag game, right? So we've been buying Nikes religiously. We've been buying Nike shoes religiously, right? Think about that. And look at Nike stock, right? Like, you should feel bad, right? You're like, man, if you just learn it, of course, don't feel bad. But if you knew this stuff a while back and you still sat there like, man, I'm good. You just kept buying the shoe, not necessarily want to invest in the stock. That makes no sense, right? Because look, again, we're talking about 10 years ago, right? 2022, right? So that'd be 2012. Nike stock was sitting at around about $21 a share. Let that marinate. Now it's sitting at $150. That's your 10-year strategy right there. Now, here's the question I ask the people again. This is not investment advice. It's just an understanding of how to, use applicable knowledge and fundamental news, and understanding how companies work in terms of, building out a business model that's starting to work on its own now. Do you think Nike going out of business in the next 5 years? Or maybe the next 10 years? Do you foresee another competitor coming out there that's out there already or coming out that may challenge Nike's supremacy as probably the number one, manufacturer of clothing and shoe apparel like that, just out the gate? At least to the tune where Nike will lose substantial market share value. I should say that. Let me say it that way. Anybody? All right. See, that ain't rocket science, guys. A lot of y'all know this because y'all seen them long lines, like freelance lines, when them shoes come out. And, it'd be frigid temperature outside. Joe could be out there, wrapped around the building to get some shoes. Joe been stabbed up, shot up, mugged, robbed, all that for it's the Joker that waited in line to spend money. It's the Joker that around the corner waiting to take the shoes. The Joker that spent the money. So everybody out there opportunistic.
They just had an incident at Big Sporting Goods a couple of days ago.
Look at
on
that.
our wristband launch for the new upcoming Jordan 4 Red Thunders.
Look at that.
Chicago, freezing temperatures outside. They got their cheers and everything.
In the dead of winter.
Yeah.
Imagine that. That's a psychological need, unlike anything else, to weather that, to go through that, just to get some material that we know as investor traders. We're like, well, that shoe only costs about $17 to $20 some odd dollars to produce, manufactured, landed in pre-shrink wrap, get a SKU on it, out the door, $17 to $20 plus dollars, and the markup only going to be like obviously 500%, 600%, and then guess what? See how that works? That's how you become more intelligent and understand how margin works, right? The cost of goods and services, how that works. You can track a shoe from its beginning to end by just knowing the prices of commodity. How much it's going to cost for the leather, Well, before you get leather, you got to what? Understand where the cattle at that they need to take the hides off their back to make the leather, right? unless it's gonna be a pleather, right? Synthetic leather, right? So you can track all this stuff, right? That stuff is all tied to the commodity markets. Literally, man, that's when you go to the next level with this stuff, of course. But that's why would you stop there? You get my point? Like, that should be exciting to see just how deep this rabbit hole goes, because you're gonna see how these people are making trillions of dollars off this information, and you already know it. You just didn't figure out how to use it, right? So we're moving away from being just users to now being creators, right? That's important. Right, that's important. Thank you, Sister Shanika, Ilba Shanika. Thank you for that. Again, you already know, sis. Look, we in this for we in this for the long term. So we take this stuff seriously, and we take it with the aspect of the fact that we don't have to feel like we got to be compromised or feel like we're in a competitive value with others. We can learn more. We can learn more thoroughly from the value that we eliminate a lot of the stuff that makes people feel uncomfortable about wanting to learn this. So we do believe in Ubuntu for that reason, because it takes a village to get this stuff. Why? Because a lot of times when we make the assessment that when you go to the actual public schools or whatever, right? Again, financial literacy is on the back burner. Public schools teach you how to be a good worker bee, period. They don't teach you how to be a good business owner. Private schools is where they teach you how to be, at least at that point, an executive or high level, business partner, employee, or business owner. That's what those schools set you up for, right? Again, you couldn't make this stuff up. We know the education system in America. So within that, you have to do this stuff through your own value of self-study, right? As they say, to be a good autodidact. And the best way to align your interests in this is to find other people thinking just like you. The forums, right? Now they got this stuff like Clubhouse and of course YouTube. There's not Discord rooms, Telegram, right? Even these video game sites like Twitch, platform. It ain't hard now to find people who are thinking and moving just like you now all of a sudden. So guess what? You now say, okay, I don't have to feel like I'm a competitive value, because everybody in those forums are not, now there's some behinds that's be in the place all the time because they just bragging they made a lot of money. These people just do it just being ignorant. But at the end of the day, they still subject to the same information that you have to learn every day. But outside that, everybody is really working together for the most part, because they really want to put out good information, not just for the value to look like they know what they're talking about, but they have to use that when they go into the market the next day, that actionable intel, right? So the markets will make you out to be a liar if you didn't, if you got bad bad information or bad intel. So that's why I love it in that regards. Again, there's no competitive value there, so it makes learning much more easier. As I like to say, it's a workshop environment. We make this a very workshop, family-orientated community, so people don't have to feel pressured, right? They don't have to deal with all the the terminology, just a little vulgar and all that. Not that we can't be adults, but we do it within context that, guess what, we can take this information and share it with a young adult. We can share this with 6 and 7, 8, 9, 10-year-olds, right, and get them on the path of this, because this is not really dealing with personality. This is dealing with information, right? So I like that. It eliminates all that that part of it. So it's exciting. Again, I'm excited. So yeah, you're right, brother Snotball. You say companies like Nike, Coke, right? Look how long Coke been around, right? That's why Warren Buffett, besides Apple, Coke is one of his most biggest holdings. Why? Because they pay a good dividend, and who's gonna stop drinking Coca-Cola in the next 10 years? Who? Matter of fact, I saw an expose maybe about 2 weeks ago. They said it's a nation, a little community down in Mexico. Everybody hooked on Coca-Cola. Like the entire community got diabetes. They could make this stuff up, and the Coca-Cola factory, they ain't even shut down the plant no time soon. Man, these people look all right. It's Hershey's, like Hershey's been around. So that's how you look at it. You still see if they got growth potential or they're more value stock, right? If they can just maintain, yeah, it may be great for just investing for their dividend only, right? That kind of stuff, again, is, to me, again, that just me. That's over the starting, right? Right? You look at Hershey's, right? Hershey's fall underneath what? What kind of industry do you think Hershey's will be in? Right? Is the consumer staple or consumer discretionary? Right? Obviously, it falls underneath what? A consumer what? Right? When you're dealing with food, when we say food, right? I just say that, right? When you're dealing with food kind of falls within the consumer staple perspective, right? Because it's subsistence, right? These are things that are ubiquitous and you can't live without them, so to speak, right? Unless you're gonna eat air, right? You're an air eater. You're an air eater, right? You got to put some food in your system, right? So even though you may HEDGE ain't healthy, but guess what? It's still subsistence value that falls underneath that industries, right? So it garners that kind of level of what investment, that there will always be a candy bar moving off the shelf. There will always be some kind of form of a product like that moving off somebody's shelf. Now they got other products too, right? Besides chocolate candy, but you get my point. So look at the stock here. This is on the monthly chart. Let this marinate. We talk about the 10-year thesis, right? Going back to 2012, right? 2012, right? 10 years ago, Hershey was trading at what? 48 cents a share. 48. Excuse me, $48. Excuse me, $48. Excuse me, $48 a share. Now it's sitting at 194. How many percentage gain is that? So every $48 is 100% gain, right? Every $40, $48 is 100% gain. So 48 and 48 is what? That's what, 96, somewhere around there? So there's your 100% there. That happened in an amount of what? 5 years. It went 100% in 5 years. So if you had a savings account that had, let's say, 100K in it, and you sitting there trying to play the money market game, these people ain't really paying you a whole lot of interest on your money sitting in the bank, right? They're charging you fees and this, that, and third, which makes no sense to me. You could have had it in an ETF or a growth stocks or value stock that has long-term growth because of their company, business model has been around forever. And that same 100,000 that would have been sitting in your money market account, maybe getting, I'll be liberal and say maybe 2%, right? That's being very liberal in the money market account. Sometimes some banks give you more depending on the economic situation, but nonetheless, let's say 2%, right? So that's a 2% on 100,000. So what's 2% of 100,000, right? That's basically what, about $200 at the end of the year. You only made $200 off 100,000 in the money market account paying 2%. Here you do an aggregate value that of what? 5 years, and you got 100%. That's basically 20% every year on 100,000. So that means every 1 year that passed in Hershey, you made $20,000 in interest accrued on your money just by investing in this asset. See, that's the math part that's people can't seem to fathom that, right? It's that part of the game. Let that marinate, guys. That's Hershey's, right? Again, then go take the next, $48. So 96 and the next 48, right? You talk around about 150, 160, somewhere around there, right? That's your 200%, right? That happened every bit of just basically 2021 last year. So that's another 5-10 years right there. If you see that, so every 5-year increment, this company has at least gave its shareholders ability to make at least 100% return on their money. That's how you break it down and see what they call it, like a compound annuity calculator, right? Compound annuity growth, calculating that perspective. You see in the value in that, how much is it compounding? As we say, compounding interest, right? 100% every 5.5, 5, 6 years. That's not bad. That's not bad. That's like you having money in a bank account and you forgot it's in there, and you want to open up another bank account. You know you still got that account though, but that money in there working, making money. If that was the case for banks, but that's why investments put you in a different perspective, right? And it's now sitting up here at 194. Like, couldn't make this stuff up. You already going into your 300% value, and it's still well into a year and a half into that next 5-year window. See how that worked? That next 5-year window. Now look at this little regression band. It's still pointed upside. This thing's still trying to go. Yeah. If we just use this as just if was a fifth, this was just a basic perspective of a logarithmic, outlook, you would say, well, the next 10 years will put us around what? Right? Roughly around about what? 30, 31, right? So look around 30, 31. Oh, excuse me, 30, 31, 20, 31. Best case, this stock will be up near what? $297. Now, how many more $48 divisional values is that over the next 10 years? Now, here's a question, just a use case. Do y'all think Hershey's going to go out of business in the next 5 years? Maybe the next 10 years then, Hershey's. Like, who's their nearest competitor? Y'all just still work. So it's thinking like that, guys. Man, right? right? Compound annuity calculator, right? Y'all, that's one that's really good. And then the compound annuity growth one as well, right? Matter of fact, we've done a show on that once before, so we might need to revisit that, right? But those things are free. You can put them up online for free, right? And use them calculators to even, look into the future in terms of how you would, set up an investment perspective and see how much it'll turn over the years. I mean, that's not speculation, guys. So this just is showing you how numbers work, how money works. This is not my opinion. This is what the stock did. This is what they say. Numbers don't lie. Look, numbers. Here's your numbers right here. Like, how many of y'all were born in 1990? Like, who was still eating candy back in 1990? Like, everybody, like, same way they eat it still to this day. And 96 cents. 96 cents. Now you sit up here and they're 200. Yeah. Yeah, but see, that's it. That's it. So you got an endless playing field here of things that you can just tap into just by companies that y'all know y'all used over the year. Like your parents been buying a certain mayonnaise over the year or a certain Velveeta cheese, Kraft. You got Kraft ketchup and Kraft products all throughout your refrigerator, right? And then here you is like, man, I could have been investing in the stock, right? Right? What Kraft ticker symbol? I think it's KFT. No, hold up, I'm tripping. I think it's KFT. It's Kraft Heinz, if I'm mistaken. No, it's not. I forgot. It's not KFT. Let me hold up. What's Heinz? I know it. It's KHC, right? KHC. All right. Now, if you look at this one here got hit a massive problem. Now, the company's still, obviously shown to be, not like it's going out of business to get bought up. But look what Kraft did in this heyday, right? They went through a merger. I think, was it last year? No, 2020. They had some kind of issue back in 2018, 2019. I remember, it was crazy. Warren Buffett had a big issue because he used to be a big investor of Kraft Heinz, and it became what they call don't touch, scenario. But Kraft Heinz been in business for a long time. They went through a lot of, I guess legalese, stuff like that, legal problems like that, and now they just starting to kind of get their stuff together. Look right here. It bottomed out around about $22 a share. Obviously during COVID, right? The whole COVID nightmare. Since then, it kind of got up towards like 43, and I was putting back. Now it's starting to kind of move back up to the upside a little bit here, right? Above its 20-day moving average here on the monthly chart. Just showing you the value of what these consumer staple stocks, if they get their stuff together, potentially it might end up being a formidable company. Now, that still goes with the fact that they have to prove themselves, right? Because they have some bad business dealings, just kind of using that, throwing it out there. But in relation to that, there's a lot of other companies that came out now that are starting to, eat Kraft Heinz lunch, right? Who's been around, who's figured out how to do, not make the mistakes that they might have made at Kraft Heinz. Now, Kraft Heinz still pulling in billions and billions of dollars in revenue, right? They got a market cap around about 45 billion, right? Around 45 billion, right? And they're just now starting to kind of somewhat try to get these stuff together, but it still shows that they had to prove themselves, right? But there's other players in that space. You don't have to just say, well, if it's just Kraft Heinz and Kraft Heinz only, then I'm stuck. No, there's other companies out there sell some of the same products they do, right? I mean, there's Calamine. There's what's the other company out there? We talked about some of the stocks before, like Mondelez that sell different products like that now. What's the other one? What's the other? Is it Quay? I'm about to mess them. You can find those the manufacturer like Frito-Lay. All the people are owned by like Pepsi, right? Castle Brown. What's the Hormel, right? Campbell Soup, like that. All of them's kind of fall in that space of consumer staples, right? But these companies have been around for a long time in some cases. Some of them better than others. Some of them sputtered, lost their mojo, and other people came in and ate their lunch, right? Right. So Kraft Heinz, one of the ones that, Campbell's Kraft Heinz, that had, went through that same kind of fate a little bit, going back to 2016, bottom out around at 200-day moving out, bounce off of it, and start trying to make a move. But on the long term, the stock still shows that it has growth, sequential growth. Even though there's other competitors out there now challenging them in some ways, but I mean, people know that Campbell brand nowhere else. If nowhere else, they know what Campbell brand look like. But they may pay a good dividend. See, people with big money say, well, I just want the dividend. If the stock ain't gonna do nothing crazy, just maintain, I can deal with that, right? If they pay a decent dividend, I'll roll with it, right? They pay about 3.28% for a dividend. All right, that's based upon that of in that share perspective. So it's stuff like that, right? No matter how you look at it, there's an investment thesis out there that you probably can roll with. But if it fits your narrative, hey, I say play ball. All right, I say play ball. Right, but you get to make that decision at the end of the day. Is my point. You get to make that decision. All right, so that's it. So I know I went off on a little tangent there, but I just want to show you guys this stuff, and see it for what it is. And look, if it's defensive plays, it's a lot of things out there. It's a lot of sector, biotech, genomics. I mean, so much, even subsectors inside of certain industries, healthcare, the paperwork side of that. There's so many different spectrums that's in the market that you can invest in. Industrials. I mean, you'd be here for days. Right. He says, as long as military has conflicts abroad, Hershey's and Mars will be in business with the government help. You best believe, right? They do buy a lot of candy bars in the military. I used to be in the service myself. Yeah. The candy business is always in play. Why? Because spouse go out the war, jokers sit around, eat candy. Women, love candy. Y'all know women love chocolate. That market ain't going nowhere. Valentine's Day, how much chocolate get bought on Valentine's Day? Like, people will trade certain stocks going into Valentine's Day because they know the chocolate stock's gonna benefit big, right? It's stuff like that. I mean, seriously, y'all can put two and two together. And then the number one thing that makes up that chocolate is what? The cocoa. See, that's exactly right. So cocoa commodity, right? Cocoa, right? Could make this stuff up, right? That you connecting those dots, 100% right. Over the snot ball, that's exactly it. Because now you start saying, okay, well, now I can figure out, where all the commodity, right? Where all the different commodities that are out there, and how can I benefit from it, right? If there is it a commodity for cocoa, and you be like, let me go check, and then you be like, oh, there's a commodity for cocoa. True story, right? That's the basic driver behind these, the chocolate, right? If they are in an inflationary environment where they can get, increase their margin because the price of cocoa is more expensive now based upon inflation, that's pricing power, right? That's pricing power, right? So running over there really quick to show you this right here. See right here? U.S. cocoa. Now ain't no cocoa growing in America, but see, they control that industry by way of their, a lot of the embargo, stuff like that, and how they kind of made it. Like London coffee, like what coffee being grown in London? Like, stop, but we went on that before. I'll leave that alone. Right, let me not get into my right. Let me get off my y'all already know. But yeah, look at here. Look at cocoa. Right? Cocoa futures, right, is what it's called. Right? Follow along with me here for 2 seconds here. Cocoa futures. All right, so let me show you this really quick here. Hold up, let me get over here. I'm tripping. Blow it up there. There we go. All right. Cocoa futures, right? Let me show you this right here. Let's go to let's go to the big chart here. Let's go to the technical chart. All right, so I can blow it up a little bit here so y'all can see this thing for what it is here. All right, let me expand it. Now let's go there, right? So let's go to the 1 month chart, right? Now this is over time, of course, in terms of cocoa, right? It's like anything, any commodity gonna have price swings. Why? Because the cost of goods and services are, in terms of commodities, are dictated by supply and demand. So this is not like just a basic growth stock. It's just a pure, play on the product in itself, right? In terms of what they call, on a global scale, because not just America buys cocoa, but other nations buy cocoa too. So it's go through the price of currency, how that works in terms of people, currency, whether they can, what they have to pay for these commodities for, based upon, the average, spot prices for this stuff. So it goes through a lot of swings, right? So let's just say in 2001, you see the price of cocoa was down here, worth about 800, spot value for a lot of it. When we say a lot, like a lot value of it, and it went up as high, hit like 3,764, in basically 10 years, right? And now it's starting to consolidate again, right? So all that has to do with the many use cases of what cocoa, and again, what that market looks like, right? This just on the monthly chart. It bottomed out you know, as you see it from 2015, 2017, and then guess what? Starting to kind of march back up a little bit. But this is how you can kind of, you know, track the value of the commodity value, right? Because now that, you know, inflation is up, some of these things are starting to kind of pick up a little bit, maybe, you know, not as much as maybe as others, but you can spark their futures or check their futures by way of, you know, seeing how they perform on an average basis, you know, which will determine the pricing power that Hershey's has to either, you know, get more margin out of their, you know, their completed products and chocolate bars like that, right? Which helps their revenue growth. If they had to price, you know, pass that price off to consumers, that you know, increase in price, well, it ain't the best thing that they want to do to their customer, but they know that's a product that's going to sell one way regardless, and people pay that extra 60%, you know, or excuse me, 20% or 30% that may cost now for the, you know, the product. Pricing power, right? You can track it all the way down to that value is my point, to the minutia of it, right? So yeah, cocoa definitely is, you know, the commodity in itself, definitely something that you can track in that regard too. Right? So it gets intricate, guys. It gets very intricate. But a lot of you guys already know this stuff. I know I'm preaching to the choir for some people, but a lot of people, you'll see this how deep you can take this stuff. You can take it deep as you want, you know, on depth as necessary, right? As in depth as necessary, I should say. All right. So yeah, so a lot to look forward to in terms of, you know, really unpacking this as a craft. You'll see that, you know, you'll never be short of feeling like you learned a lot or learned it all, right? You always be on the quest to learn, you know, to get more information. You always be on that quest, right? You'll forever be chasing more information in this, because it's a lot of it is like, man, this stuff is, I mean, it's the global markets. It literally is the global markets. You know, it's the global markets: oil, gold, silver, copper, soybeans, feed the calf, feed the hogs. I mean, they got everything over there. Because you want to learn, you know, follow the bond market. Of course, they even got crypto now, forex. I mean, it's many other mutual funds. It's a lot of things on here that you can check. You know, just you know, this website here, but all of it is synonymous to the markets, right? So investing.com is another site we use a lot. Of course, you know, tracking the futures market at night, all that stuff like that. Just, I mean, it's a lot. It's a lot. So you'll never run out of, you'll never get, you know, become bored. You know, you'll get probably, you know, fatigue, maybe, if anything. But there's so much more information out there that you can, you know, you'll learn just by being inquisitive in this. It'll take you deeper and deeper and deeper, and you become more knowledgeable. Right. So what's going on, Oba Sonny? That's you popping in now. I know I got on the tangent, man. You want to overlook it? Forgive me for that, Oba. You know,
Nah, it's all right.
Man?
I'm popping in and out because I'm still over here making people rich.
See, look at that. What's going on with your day, man? How's your day? What's going on in your neck of the woods, and what you say about the market today?
Can you hear me?
Yeah, I can hear you now. Go ahead. Mm-hmm.
Oh yeah, it was pretty cool. I guess the Merc the whales came in and just leveled everything out because you know it's on the rise. But the way that the volume is right now, with a lot of people pushing in, I really see it at about in between 85 and 83 by the end of the week. Looking at the charts, especially going by the charts, with I've been using the Fibonacci sequence lately just to dictate what my patterns is going to be. I mean, what the market is basically not going to do, but most likely will do. And so it's been working out really good last couple of weeks.
So definitely Merck is a company that over been definitely, you know, learning, right? As we say, you know, sometimes you could just get good at learning like one asset, you know, learn this, you know, its moves and how, you know, how it, you know, respects news or this, that, and the third. And, you know, from there, you can learn how to obviously strategically get good at applying that across the board, right? Through different other, you know, assets in terms of, you know, the psychology of how stocks, you know, how well they fare, you know, under certain news, you know, values and fundamental, you know, kickers that help the stock or maybe hurt the stock, whatever case like this, you know, obviously in that business of, you know, in the healthcare set in this regard. So although they did not produce a vaccine, they came out with a therapeutic and then what they, in a COVID pill, right? Kind of like, you know, to help people stay out of the hospital. So they're just trying to also utilize, you know, their leverage of being in the space to also help their bottom line. And so lately, of course, if you look at the stock, it's like it's been going sideways. Most healthcare stocks, this typically how they trade, right? A lot. They just kind of get to a point when they hit peak value. When I say not peak in value in terms of price, in terms of their price, but just in terms of they can only control so many different companies that they try to, maintain their supremacy of being just a consistent business model, right? And they pay decent dividends, but some of these stocks are starting to revive back to being like growth plays because they're dealing with the signs of the time, right? They have a new somewhat lease on life to a degree because they can now offer another extension of their business by way of having the people in play to put forth a better pill or a different drug, and it'll turn the stock around. So of late, as you can see here, Merck been getting that kind of bang up because typically it trades at a very low beta. I mean, it stays in like a tight channel because there's not really groundbreaking that comes out of the healthcare sector like every day, unlike a lot of stuff you get in the EV space. So it's a very controlled stock. But as you see here, it has bounced pretty substantially here within the last, let's say, maybe 6 months or so, based upon all that news dealing with COVID. You see they got the news here at around this point, went from $70 and went up and hit a high. At this point here on November the 4th, it got up as high as like $90. As you heard him say, he's trying to play it back towards that 80, 85, maybe potentially even go higher from there because it's now starting to get a little bit more recognition because of that COVID pill, right? And the other things that they got in-house, of course, but it helps fuel the stock, right? It helps fuel that sentiment, right? So that's another way of looking at these things too in terms of investment thesis, right? Just learning how these things, how these stocks, move on certain values of information, et cetera, et cetera. And you can make, again, a trading thesis out of it, or even investment if you really like it long term. So again, not hard to do that once you realize how to put two and two together, right? A game plan together. And as you see here on the daily chart, ever since it's bouncing at around that 200-day moving average there, it's just been making, strategic, nice little, clean little moves, day for day, literally here in the stock, coming back even down here at the lows around about 71. Now you're sitting up here at 81, right? So that was every bit about maybe about 2-3 weeks there, close to that. And so you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Yeah, about near 3 weeks. So $10 in 3 weeks, right? About $10 move in about 3 weeks. That's good money, right? If you learn how to use this to your advantage, right? So there's always an investment thesis that you can apply once you figure out how, the sentiment of a stock, again, relinquishes itself to you where you can realize, okay, I see what's going on here. I see how it typically trades, you can track the volume, you can track the sentiment, you can track, again, any fundamental news that may come out on it. Of course, if you just follow it like that, if they got any stuff coming out, again, you can really get some really good key information on how to play it, more thoroughly. And so he got this one mapped out because, he be posting in the group a lot. He got the thing mapped out. I like to see that too because he's learning so much in the process now of focusing on, not trying to chase a lot of things, but staying within the confinements of what he can, again, account for. That's going to help his investment thesis going forward well into the future. And he'll know how to apply that same strategy to a degree to another stock and learning its psychology. Then he'll figure it out, level it where it needs to. And then it's just wash, rinse, repeat. All right. So that's what makes this stuff great because you really, really are learning something that's, man, to me, I think it's just awesome, right? How to track money. Literally, that's what we're doing. We're learning how to track money, right? How people, utilize.
Hey, Oba, can you put the Fibonacci on there?
Yeah, I want you to do that.
I don't know how to put it on from here on yours.
No, I'm gonna let you share the screen because see, that's the part about where that hands-on.
Yeah, my StreamYard, it cuts off though. That's why I can't. Like when we do the Zoom, I could do it on the Zoom, but on the StreamYard, every time I go to another page, it clicks off.
Okay, because I really want y'all to get that hands-on that hands-on experience, right?
Oh yeah, I'll make mine look kind of crazy. So
you want to do it?
I basically put I'll make it go straight up, like no matter what day it is or week it is, make it go straight up as high as it can go. Put that line on there, and then put the Fibonacci on there. Put the Fibonacci for the minutes, and then put the Fibonacci for the days. That way, That way, when it does slow down, or you see it stopping and it hasn't even hit the Fibonacci, you got to look to the days ahead. And then, so when you look at the days ahead, it'll tell you why it's slowing down or why it has a resistance.
Right, while it's
And then,
tracking. Right.
exactly. So you can learn like where you need to buy in at, where you need to sell at, what's it going to do for the next day, or what's it going to do for that same day. Possibly. Not. It's
Makes
not
sense.
for sure.
No, makes sense. Makes sense. So, just kind of showing you, because typically when you do it from a most recent pivot point, or what they call base support, right? That's how most people draw this. Some people do it based upon short-term moves. If they want to say, excuse me, I want to use 200 moving average as my base case. I always look at the bigger picture in terms of, base case support points where it kind of pivoted from and held support at. And, everybody, kind of uses certain different strategy within that. But that's what I would do, because that would be the launching point. Like, say if you had exorbitant seller like this did, it came off 90, backtracked all the way back down here to 70, which is a form of support because we've been there before. Like these little candles here you see there, look to your left, right? You look over here again, that area right here around $70 a share, that area of chatter support there, that showed to be a great massive support point there. So in a short-term perspective, this is new money coming in at some point, because we've already kind of washed out a lot of the sellers who came from this big blow off top here, this move off this point here. You kind of retrace that entire move. So you basically just back tested that entire move. It held support there. So guess what? That means all this right here is new money, old money, but mixed in with a lot of new money. So that would be my base case in terms of how I would structure my fib on this here. And I'll play it within that, within that structure, right? So as you see here, of course, the medium line that most people look at on the Fibonacci is the 618, right? 618 is basically what they call like the midpoint or strength of on the Fibonacci retracement. And then, of course, at that point, people start saying anywhere around when you see it, start seeing these the red areas right here, those are what they call, just highly overbought perspective of the field. You should start taking profit anywhere you start seeing some of those red places. That's just the overall mindset of Fibonacci, how they work. Because that would be like it's starting to overheat, it's overbought, it's extended, whatever, right? Time to take a little profit, right? Especially if you're using 618 as basically the midline, right? Some people obviously use the 0.5, right? But a lot of traders use the 618, right? That's just an old school, retracement line that a lot of algos as well sometimes are being programmed to move off of, right? So as you can see here, if I blow it up a little bit here, it's within that that 0.5 and that 0.38 field, right? It's kind of in that little box down. Now, if you as a trader saying, well, this is the area of interest I'm looking at here. Let's say based on the chart here on the daily, is kind of hit overbought, a little bit here, right? It got above 70 on the RSI here. And that's why you had a pullback here inside this box here, right? It didn't clear it. It kind of got up inside of it and, closed above it. But right after you had an overbought perspective here, overbought, it began to kind of pull back a little bit here. So it's just, a little cooling down because it got overbought, right? And no harm, no foul there. But it still respected that 0.5 field. As you see, the wick came down and tapped it. I mean, literally tapped it to the T, and it bounced off that, right? It didn't break below that, right? That means there's still, people who are still holding this play and thinking that there's potential more upside, right? So that gives you again another a visual perspective of how to also use like these indicator oscillators, these different, things like Fibonacci retracement, the spirals, the Ikimoku cloud, Helsinki, like Elliott wave, like our brother Dollarwell, he used the Elliott wave a lot, right? The ABCD pattern or ABCD patterns there like that. Within those different waves over time, you will have, a tranche of selling and buying going into certain cyclical moments of markets, right? Fibonacci retracement gives you that kind of level to kind of put training wheels in the market in a way where you can start seeing levels of sequential growth within that, aspect of strength of a move or, the degradation thereof. Right. So, but yeah, I'm gonna let you can talk it through it over. I guess I got it up here because I was trying to put you to work. You saw I was trying to put you to work, man. Go get on this thing and share your screen because I like when people do that, man. I love that. Right. Because it's, I want to, try to be there to help. But if you want to talk through it, I know I was giving my little commentary on it, but
no, you good. You doing good. Just I could read it better when I actually have mine. I just like I've been looking at it every day from morning to night, but for the last couple of weeks, just really getting it down packed. So, like as far as this stock, so I already know it by heart, like where it's at. So I could just tell you off like on some freestyle.
Gotcha. Well, that's it. I think just just kind of add value to it.
As far as like the that last yesterday, right? Yesterday, how it jumped from 70, I think it was at 79, and then it went to 82, and then it had a retractment. So today, everybody was jumping in it, thinking that it was going to jump. But remember what I was saying as far as the Fibonacci sequence, using it on the using it for the day for day, and using it for the minute ticks. It makes a difference. So you'll be able to see every little resistance. And so sometimes it makes a difference, because just like today, when it resisted at 80.
You breaking up over. It's breaking up a little bit. Let me probably in a bad area. Yeah, give him a minute. I guess it kicked him off. He'll be back in a second. But yeah, again, just use that with you. I guess I can fill in the blank there. Just obviously hit resistance today around about 82, right? A little bit over 82, like 56 to be the high today, of course. But it kind of paralleled off that last particular candle here the day before, because that shows you to be, anytime you look to the left to kind of establish a resistance, if you break it out above that. So that was a resistance. Yesterday hit a high 82.45. Today, you kind of pierced above it just slightly a little bit. It hit 82.56, but it still closed below that. So that was the, clearly the turning point of the stock today. And like I said, it got overbought. Looking at the RSI here, got above 70 here, the previous day. So anything today was just going to be a kicker, or, a moment for those to take a little profit that didn't get a chance to get out yesterday, and they realize it's pulling back a little bit. So it's cooling down a little bit. That's all it is. But it's still respected. Like I said earlier, it came down and hit a low of $80 and, a low of what, 80.65, right? And it bounced, right? And it closed up. It closed today at what? 81.67. So that's a whole dollar off the bounce of that fib today. Like that kind of, like, that's how you make money as option traders too, by playing these Fibonacci, but they give you more precise value as well. Some of the algos of playing these fibs. That's the easy way where you can also apply that as a say, well, here's my least point of resistance here. Why? Because that's the what, a point of support that gives you strength at around that price based upon what the Fibonacci doing, just looking to the left and seeing these points here on these candles here, et cetera, et cetera. You can play that as a point of a better risk management or risk mitigator perspective there. So you can say, well, I'll buy my options down here on this little pullback here. At least I know my stop loss is very tight. Why? Because that's a point of support. No harm, no foul. If you get stopped out, anything above that is what? Money. So that's a whole complete $1 move retracement back to the upside off that bounce, off that fib there, that 0.5 fib there, that you can play that in the options market, just using options as a strategy in this regard. Or if you got equity shares, you just buy equity shares down there, and you'll benefit from such a move like that, right? Strategy, right? This stuff is great, right? Right? This stuff is great, right? So it's a lot. Again, it's a lot within that, in that regard, how to play it and use it to your benefit. And you'll see exactly over time how there's so many different cheat codes and instruments that you can use to apply, and it'll help you again within putting, as I like to say, training wheels on the market, right? That's another way you can put training wheels on the market, or on a stock or an investment value, and you can just trace it. Now, see this little dotted line coming through the middle of this little hash line, kind of like how you look at it, like the linear regression line that I use a lot, or a linear regression band. That there's kind of like a gun line, right? It's like a mid-level or mean, reverting to the mean value of a stock that's in a growth mode, and it's set up within this box to kind of be, the minute, meaning how many days you take it out to meet a certain goal, you can kind of track it along that level of movement as well, right? So as you see, it's kind of playing within that, that straight line perspective. They're pulling up, pulling back to it, may pull down, break below it, get back at or around it, and just still trade into the value of the growth in the stock. Be it on any kind of time frames. This is on the daily chart, of course, but you'll narrow it down by your time frames as well. And so looking at Merck again within that regard, if you're doing the V-shaped reversal here or trying to, complete this cup and handle at least in this regard, even at this point here where you hit resistance here, or you hit resistance clearly at around this area here around about $83.30 some odd cents. That's the area right there where you would want to obviously do your what? A resistance bar, right? You're playing into that place for potential breakout, right? Anything at or above that is game on, right? Especially in terms of price discovery or price breakout or whatever. So that's another way. It'll also help you aid in being able to kind of find out where's your areas of resistance, even though you got a bar here at the 0.382 here, that field there, you can still see exactly where's that peak point there with all that chatter there. All right, so great bounce off the 70 point. Like I said, over 10 days, or not 10 days, there 3 weeks, you already up like $10 a share, right? So I mean, it's tracking money like that makes this stuff exciting too, right? I love this stuff, right? So man, again, you can put training wheels on any stock, no matter what, and you'll learn how to use it to your benefit. Again, you don't have to struggle when you can, when you figure out how to utilize these things. Like it's like you showing up at a construction site with only one tool. Like you can get the job done possibly, but it's better to have more tools at your disposal. So that's how this knowledge works. You can apply more knowledge when you got more understanding, right? Because there are different instruments, things that you can look into that will help you. Make sense? All right. So that's it. So yeah, that's Merck there. I know over. I think he hit maybe a bad service area, whatever. So just want to add flavor to his stock that he's been trading. And again, he's been doing a great job at breaking down Merck. Literally every day he's posting, a different perspective on it, how he's playing it, and he's learning so much. And that's why I love that stuff. And I love to see people go through that level of unpacking and figuring out how to play a stock, right? A specific one. He's focusing on it, learning the sentiment of how it trades price action, and the volume, the liquidity, how to plot the news, and the sector, as a whole. It's great, right? I love that stuff. Right. So shout out to Over Sonny in the building. Well, he was in the building, again, giving you the breakdown, in terms of his, outlook with Merck, right? Merck. All right. So yeah, so a lot of stuff, guys, a lot of information. Again, you never get old at this stuff. It's so much. You'll find yourself countless and countless of hours digging through this stuff and figuring it out, right? But it's worthy, right? It's to be, commended. It's commendable when people submit themselves and their time to learn it, because you start to realize, like, man, yeah, these guys are starting to get it, right? They're getting it, Now imagine where they're gonna be 5 years from now. Imagine where they're gonna be 10 years from now. That's why I say don't stress yourself, right? Do not stress yourself, right? It is a marathon, not a sprint. Take your time, learn it thoroughly. So when you come at it, you can give people, again, good actionable intel. You can also give them, proper information. Of course, you want to make sure that they understand the rules of engagement. That it is definitely, a marathon, not a sprint. And it'll, they'll thank you later. I guarantee they'll thank you later, right? They will thank you later. Like, man, I'm so happy, because they do realize that, over time they'll eventually only get better, right? They only get better. Like you say, life insurance and stocks are mandatory at the age of 18. 100% agree with that, Oprah Ramsey. 100% agree, right? Understanding how that works, right? Got to understand this. Thank you, Oprah, Monica. That's right. I love it. Appreciate it. Humbled and honored. And again, just a part of our, our daily existence, right? Daily bread, right? We're just trying to bring content and context, and everything that we try to speak on is something that we're saying, hey, this can, this is how you back test it, right? This is not us just making it up. This is how you go track it and back test it. In this case, we are using, instruments. In this case, the Fibonacci sequence, when we were showing on Merck, that's how you definitely learn how to use those things in your advantage, right? They're just giving you training wheels. You're getting training wheels on the market, right? Like, jokers don't mean seeing how, man, look, I love it. So that's it, guys. I ain't got really nothing else, man. And but that's a good way to look at it, but Shanika, that's it. That's why I say you ain't got to stress. There's some of the different things out there. You'll be surprised. You'll be here for, man, look, years trying to figure out all these different indication things. It's all about what works for you, though. That's the great thing about this, because it really helps you, right? It really, really will help you dumb the market down, as I like to say, right? We just here try to dumb the market down. All right. So that's it, guys. I ain't got anything else. Guys, I'm gonna get out of here. I enjoyed you guys as I always do, right? Get ready to get me a little, little dinner. All right. Get ready for this market tomorrow, because tomorrow is what? CPI data day, right? Tomorrow is fireworks day. Tomorrow is like a payday for markets, right? Because it's a binary event. So that's CPI data tomorrow, whether it come in hot or cold or neutral, one way or the other, markets should get some kind of lift off from it, and they might try to kill the market and theta burn the market, but typically data points like this, that's at this level of importance or weight, it will not be, typically, a very stagnant theta burning day. You're going to get some movement expansion somewhere, right? Even if it's just for the moment, that news just found, drop, and the markets move off it at that moment, but it's going to be people looking to capitalize off of it, in terms of the traders and also the investors, right? How they need to look at, again, their portfolio, right? They in these highly leveraged positions that are very, frothy in terms of their PE and they tech stocks that are, one-sided trades at this point, and they start to see that inflation is not waning, then they might start saying, yeah, this is more reason why the Fed's got to hurry up and start tapering more and raising rates. The fight of combating inflation, that might be all they need to help them make that decision. So that's why I said it's a lot of things that come out of this information. Right? I appreciate that over, brother Mathis. You already know it. Karibu, brother. You already know it. Right? You already know it. Karibu. Right? So yeah. So we'll be ready for it tomorrow. I hope you guys can generate some good, information gathering from it, in terms of how markets reacted from it. It's a lot of it just gaining, insight, right, through observation. Even if you're not trading the market in real time, real money, it's good to see how markets respect, or honor certain news points that come out like this. So I always say that's sometimes the best trade is the one not taken. It's through the value of your observation. What happened, what you watched, what you witnessed, what notes you took from that. How do you interpret the information? That's positive. Right, that's a net positive to your growth, right? So that's why I say don't rush it, don't stress it. It's going to reveal itself to you one way or the other, right? And so you being inquisitive and curious is a good thing, right? It's going to lead you to want to learn more. All right, so that's it, guys. That's all I got, guys. I'm gonna get out of here. We put in around about near 4 hours here. About 3 hours. Give me about 3 hours here. We started around about 4:30. So here it is, a little after 7:30. So a lot of about 3 hours of good information. So seems like there's never enough time to get all the information out because there's so much, right? We'll be on for another 7-8 hours. Man, definitely know I can go that long too. But I gotta spare myself, right? I gotta spare myself if I get right for the next day. But I appreciate you all. Thank y'all for tuning in. Again, thank you for your patience and your patronage and the channel and just being family for the entire community environment that we have here, and in terms of just trying to be better at what we do as investors and traders. So again, it's all hands on deck, and it's never a dumb question that you can ask, all right, and it's never a weird answer given, because it's just going to force you to be that much more of a detective too, to figure out how to get the best information for it. So I love this stuff in that regard. No pressure on any of you all. Trust me. Got questions, ask them. All right. It's going to help you become better. All right. So that being said, guys, I'm going to get out of here. I appreciate you all. Look forward to seeing you guys on the next one. Hopefully we get a chance to go live tomorrow doing the actual CPI data, news, not necessarily maybe the news release when it come out early, because I'll be moving around, got a lot of stuff going on, but because it comes out at 8:30 in the morning, 8:30 a.m. that data comes out. But maybe the intraday aspect of the market, I may get a chance to go live, and maybe we can see how the markets are reacting to that news going into it. And like I said, I'm hedged for tomorrow. Since we talked about hedging today, I'm hedged going into that news tomorrow, especially in terms of my trades. So I got puts and calls on, and I'm bouncing a few other little positions here and there. So we'll see how things work out, right? So that's it, guys. With that being said, guys, I'm going to get out of here. I appreciate y'all. Now I go off, with the same song we put out today, right? The Curious Investor, right? So shout out to everybody. Thank y'all for tuning in. See y'all in the next one.
I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. Now you be surprised at the info you get is by letting them talk, so I'm letting them talk. Gotta keep quiet, maneuver in silence, then let them in, chalk up their body, another one body, that's just how it go. I got some secrets, I'm shaking the game so they stay on their toes. Stay in your lane, how to stay on the go. I can play with the pros and act like a rookie, so they overlook me, then I double up again under their nose. None of them cold, they just got lucky but never adapted, so I'm to the one if it's coming to blows. My enemies cutting it close, I let them think that they got me, but what do you know? I had them beat before we ever spoke, I'm ready for smoke. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. Now they ain't go harder than me, they need a blade in a sheath, a shank in a piece, a crate full of heat, an army, a fleet, a tank in a jeep, a navy at sea, with ace, a marine, an ace up their sleeve, a team of marines, a freak on a leash, a beast with an appetite, razor for teeth, and still they will lay at my feet. Boy, you got the wrong one. I gotta look over all of my publishing statements for Q1 as soon as the song's done. I gotta call up my mama and tell her I made it as soon as my log's done. I gotta read all my trade publications and sip my tea till it is all done. I think it's all fun. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. Now you be surprised at the info you get is by letting them talk, so I'm letting them talk. Gotta keep quiet, maneuver in silence, then let them in, chalk up their body, another one body, that's just how it go. I got some secrets, I'm shaking the game so they stay on their toes. Stay in your lane.
All right, guys, that's it. So I guess I'll see you guys on the next one, guys. Peace, power, and profit. Shim Hotel, again, stay healthy out there, stay aware, because we're still fighting this COVID stuff. So we could be around to get these dollars, right? So shout out to everybody. Thank y'all for tuning in. I'll see you guys on the next one. Peace, everybody. Peace.